amazed. Around every turn getting here is awesome. Yeah, vacation, nothing. That was 30 hours, Andy. That was straight up getting to where I needed to be. But wow, it's gorgeous here. Guys, it's great to have you this morning. I hope you're doing wonderful. Hope life is treating you right and you're ready to do a little education today. We're going to start like we do every day. We're going to go to forexfactory.com, take a look, see if there's anything that they're saying that could disrupt our patterns. Because that's what we're doing. I want you guys to just accept that from the beginning. We're pattern readers. We are waiting for the market to give us an edge. And then as soon as we see that edge, we're going to pounce. Today is Monday, May 19th. And just a bunch of FOMC, blah, 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 talking heads, low impact, not really worried about it. So today's a great day to just focus on your rules. All the rules that I'm going to talk about in this room this morning, they come from the Nexgen Software Services page, specifically the trading guide. This is where all the answers are. So if you find yourself in the afternoon, you're like, man, I needed that answer. How do I define momentum? You're going to find it all right here. Momentum, termination conditions, entry opportunities. Everything that I talk about for the first hour in this room is right there. Nosebleed, I'm not sure if that's going to start today, but how about this? At the end of the class, I'll stick around as long as we need to. Um, so we'll go through and we'll talk about it and we'll look at it. And I'll give you guys everything I have and we'll do a little discovering together. So I'm going to say, yeah, absolutely. I'll do some separate trading, view trading. It's not scheduled, but golly, it's 6 in the morning here. I got all day. We're good. I'm excited to as well. I'm excited to do some trading, view trading. So yes, sir. So write all your questions down, guys. I'll do the best I can. Extra strong coffee, yeah. It's going to take me a couple days to get used to it. I was out like a light at 8 a.m. or 8 p.m. last night. The sun wasn't even down. Um, I don't know if it was exhaustion or if it was just getting used to it. So, guys, we're going to talk about one thing specifically this morning. We're going to talk about what we call, whoops, a high probability trend trade. There it is right there. This is a trade that typically wins 70 to 80% of the time. Guys, this is the core of everything that we do. This trade is going to have you recognizing one specific pattern, a pattern that's been proven to win more than it loses, a pattern that is repeatable, that is testable. You can verify it, validate it, and ultimately you can trust it. And what it really does for you guys is it teaches you to read your indicators. And that's kind of my job, is to help you look at your charts and just understand three very specific advantages that are going to place you in the highest probability trend trade that you can take. And what you're going to realize on this journey is that chart reading is about 90% of everything that you do. You're literally going to sit on your hands and be patient and wait and say, I need my rules met because my rules have been proven by me to win more than they lose. There's a statistical advantage there. There's what I like to call an edge when your rules are met. 10% of your day is going to be entering the market because the rules are met. And once you can do this, once you can go through this very basic approach to the software, reading the indicators, you're going to understand these really cool concepts like where the market is likely to continue. These continuation points are going to be an entry for those trend trades that you're taking. You will understand where the market is likely to go. This is going to help you with targets. And then finally, you'll understand where the market is likely to stop. This is my favorite one because these are what we call termination conditions. And a termination condition can literally pump the brakes and stop the forward progress of an established trend. So you're going to be able to see these before you ever get to them. You're going to have an easy recipe to recognize them. But guys, all we're really doing is we're waiting for the market to show us what we need to get in. It's going to show you what you need through those three rules. Strong triggers, none of those termination conditions present. And then we're going to have an entry. And your entry is just going to be that where the market is most likely to continue point, guys. Each of these rules, when met, provides an advantage. And I want you to think that the recipe for the perfect trade is the accumulation of momentum plus a clear path, and then finally defining an entry. When these rules are met, you have an edge. It's time to enter the market. When these rules are not met, I want you to embrace the idea that it's okay to be in that 90% and not enter the market. These three rules are going to happen on only two charts. We're going to use a large chart and a small chart. How's that for technical jargon? Your large chart is a very slow moving chart. It's a broad stroke of a brush. It will show the overall opinion of the market, guys. And it takes this one bar that's I always want to say circled. It's got a square. That one bar is going to define the direction of the market and let you know which way you should be looking for your rules to be met. That one bar is going to define momentum, rule number one being true, and it's going to define whether or not you have any of those likely to stop areas in your place. So rules one and two must be met, and once they are, you're going to turn your attention to the smaller chart. And inside of that one bar are all of these bars on a smaller chart. This is your refinement chart. It takes that very big picture and it pinpoints entries with rule number three. And this is going to create smaller risk and larger profit potential for you as a trader. So it only takes two charts and it only takes three rules, but the large chart leads the way. That big slow chart is going to let you know when it's time to look for an entry, because the big chart is the big crowd, guys. Here's today's metaphor. Your large chart is going to define direction, it's going to define momentum, it's going to define areas. It's going to let you know, hey, it's time to go look for an entry. You have everything in your favor right now. And I want you to think of that large chart as the men and women with the power and the influence to move the market, to make things happen, to create trends. This is who we want to trade with, because the large crowd typically wins. The small crowd, this is the fighters. These are the people that create what we call a retracement. In a retracement, the clinical definition, it is a small push counter to the underlying trend. So it is a small downward movement when the large crowd says up, or it's a small upward push when the large crowd says down. Good morning, Cav. Good to have you in here. So we're going to follow the large crowd, but we're going to embrace the small crowd's fight. And your rule number three is designed to pinpoint right where they're most likely to fail. Their fight typically fails 70 to 80% of the time, guys, which means that when you're entering with that highest probability trend trade, when you're following those rules, you have the potential to win up to 70 to 80% of the time. This morning's events. We are going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I say we, I mean you. I know them. I'm going to teach them to you. It's okay to trade when the rules are met, because the rules create an advantage, an edge. A pattern is all that it is. And that pattern has been proven. And you're going to be able to prove that it wins more than it loses. You will have the ability to simulate and to practice. And the first step in becoming a confident trader ASAP is, guys, post your pictures in the room. Every time you take a trade, go through it. Talk about your advantages. Tell me what you see. Drop it in the room. And I promise you a private session. You and I will talk. You'll ignore the other people in the room, and we'll focus on your chart read. And let me show you exactly how you can do this to get the absolute best feedback. If you will talk about on your chart, annotate it. This is my momentum. This is what I thought of the path. Here's where I entered. Here's where I exited. We're going to do a couple different things. We're going to make sure that you're reading your indicators accurately, that you understand momentum, path, entry. If there was an opportunity, maybe for a lower risk entry, for more profits, we'll talk about it. But every time you post in the room, guys, you're going to get that feedback from me. Good afternoon, Miss Jen. Does it sound better? Okay, good. It's not weird. Yeah, I am. I'm looking over your shoulder, Jen. Don't break any rules. Watching you, all of you. I think, it's my humble opinion, that the feedback that you get in this room, guys, it is one of the biggest advantages to Nexgen and the education that we do. Because every time you take a trade, guys, we all make mistakes in the beginning. I'm still making them now and then. But you'll get feedback instantly, 15 hours every week, and you're going to know what's going on and how you read it. So take advantage of that. That's one of the great things of the room. We're also going to simplify. I'm going to hand you a plan. I'm going to drop it in the room, guys. Everybody's going to walk out of here with what I call the KISS plan. And the KISS plan is a way to optimize your chances of success as a brand new user. You have to know what looks you're going to commit to. You have to learn these looks, these patterns, so that they become easy. For you brand new users, the one thing that I really like to encourage is in the beginning, don't be hell-bent on looking for trades. Really focus on finding advantages, guys. Focus on being able to recognize momentum. Let it take a half a second, and it will with just a tiny bit of study. Make sure that you understand those termination conditions, how to define them, and really piece together how to get that entry area. And what you're going to do is your plan is going to describe this pattern through rules, the rules that we're learning, and you're going to be able to keep it very simple, very focused, and hopefully very profitable. So we're going to use the second step to becoming a confident trader ASAP to really achieve that goal of pattern recognition, guys. And it's use the spreadsheet. Use the spreadsheet that Nexgen gives you, that I give you. I am Nexgen, not really. But there it is in the room. Nexgen tracking sheet, guys. This spreadsheet is 4 tabs. The first tab in green is what it looks like to have the rules met individually, what it means to have strong triggers, a clear path, and an entry. And all it is it's 3 separate advantages that come together to create the highest probability trend trade. And these rules are just describing a look on the screen. So strong triggers has a very specific look, and there it is. And then if your commitment is to trade when the rules are met and be willing to be patient when they're not, you have to understand weak triggers. You have to understand termination conditions, because this is your patience piece. This is the one that is going to help you stay away from what we call avoidable losses, giving money away, taking trades without an advantage. So I'm going to give you a sheet where you can begin to fill this out on your own to create your own study, but I've given you a really good head start on it and some study materials from the get-go. The second tab is the client trades, and this is where I appreciate you guys more than you know. This is where you post in my room and you say, hey Mark, check it out. Here's momentum, and I'm coupling it with path, and look at my entry, and what do you think? And I'm like, oh my goodness, gold star, high five, great job. And now I'm going to steal it, and I'm going to drop about 500 of those into this spreadsheet. New users, go through and look at these patterns, read the words that are written on them, and that repetition is going to help with recognition. I've broken down the entry sequences for both long and shorts for you. A little bit on management. This will be on the plan that I give you. Bigger thoughts on management for when you begin to grow with the software. Patterns that tend to repeat themselves. And guys, the pattern that shows up the most in here is what we call the gap theory. You're going to hear it in the classroom. It's just another way to identify termination conditions when the mid band is behaving like that. The third tab is where you're going to build your plan. All these pictures that you take, all these annotations that you produce, when they fit the bill, when they follow the rules, when it is in fact the pattern that you're looking for entry, start flooding the screen section with those pictures. And if you wake up every morning and you look at it and you're like, okay, this is what I'm looking for, it makes the trading day a little easier. And then finally is the trade tracking sheet. This is the one that when you talk about the path, guys, track your real-time performance in a spreadsheet. Because what this tracking sheet does for you is it gives you a place to put your pictures. There is a link reminding you how to annotate for the best feedback, how to post into the spreadsheet, capture software, and you're just going to drop the picture of your trade in there. Your annotations will already be on there. This is what I thought about momentum. This is where I was with path. Here's my entry. Here's my exit. But every picture in the room gets feedback. And again, sometimes the feedback, guys, I love to celebrate victories. I will pump your ego and attaboy, attagirl you all day long. But I'll also tell you if you made a mistake, if you broke a rule, if you're doing something that's going to hurt your long-term success more often than not. And that feedback from class is where you're going to begin to recognize things. So every morning, I want you to wake up and I want you to dedicate 3 to 4 minutes of your morning to looking at the trades that you took yesterday. And I want you to ask yourself, what worked? What didn't work? What felt easy? What felt forced? And what you're going to do is that brief study each and every morning is going to have you focused on the good things, and it's going to have you focus on avoiding the things that are taking success away from you. And what you'll notice in the spreadsheet is that challenges will begin to repeat themselves, trading indetermination conditions. That was mine. That's a page out of the Mark Novak story. I kept breaking rule number 2. And most of the time, in the moment, I had no idea that I was breaking rule number 2. So I would post that picture in the room. I would get feedback from my brother who taught it back then. And he's like, Mark, how many times are you going to break that rule and hope to win? Man, you're just throwing money out the window. So use that spreadsheet, guys. Embrace it. Make it a part of your everyday. Post in the room. Don't be afraid. You can't post too much. You can't ask too many questions. You can't put me out because I'm like, oh no, Pete dropped another picture asking a question because he wants to be a better trader. Ugh, you'll never hear it. I love what I do, guys, and I love the feedback part of this. So as we get moving, we're going to break it down. Not in a funky beat, but really just 3 rules. We're going to focus on them. We're going to embrace them, guys. What do they look like? What do they mean to you? And we're going to start on the large chart because the large chart leads the way. And the large chart must have strong triggers in order to even look for rule number 2 because we want the advantage of momentum. Easiest look ever. When the background is green, the market's going up. When the background is red, the market's going down. That's your trend indicator right behind that first bar. The only way to have strong triggers in an uptrend is if the small triggers are green and the large triggers are green. So colors match, and it's just a little safety tool. In a downtrend, the colors match. The look that you're looking for is separation between the triggers. When the small triggers are up and above the large triggers, when there is space between the two and the large triggers are wide. Let's take some pictures today. I'm excited. Whole new part of the world. Guys, when your scissors are open, when you've got 2 blades apart from one another, there you go. Separation between the small and large. Guys, this is your look. This is strong triggers. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Jerry S. gets credit for this one. When the scissors are open, they can cut you a check. I love that because, guys, odds favorable momentum. The odds are favorable to continue in the direction of the trend. You're going to hear me say odds favorable momentum all day long. Strong triggers push a market. Strong triggers on that large chart, guys, they're hard to stop. It's what we look for to break key areas. Strong triggers are actually when we are buying and selling Fibonacci support or resistance on that smaller chart. Your large chart, that one tail with the advantage will look like that bar sprouted a tail. You're going to be able to pinpoint right where those tails are most likely to form. And guys, strong triggers even cover some of the mistakes that new users tend to make. Strong triggers saved me more than once in determination conditions. But be aware. Rule number 1 is a rule for a reason, guys. On a large chart, momentum is difficult to stop. It's a loaded freight train, and it's heading down the track, and there's a tailwind. But scissors close. Small triggers return inside of the large triggers. We call this a weakening of the large triggers. And when you weaken those triggers, guys, anything can happen up or down. You'll find that I'm a little bit of a language nerd. I want you to look at the separation, and I want something in your head to scream at the top of its lungs. The odds are favorable for this market to continue in the direction of the trend. And when those small triggers return and those scissors close, I want you to say, man, anything can happen. I don't have an advantage. I choose not to look for a trade. And let it be that black and white, because strength pushes. Strength breaks areas, guys. Strength is when we're looking to buy those pullbacks for resistance, to buy those pullbacks at support. But strength isn't a 100% of the time endeavor, guys. And strength turns into weakness eventually. And when I have that weakness, when anything can happen up or down, guys, this is when the market retraces deeper. This is when key Fibonacci areas tend to stop it and create reversals. So brand new users, I would even say experienced users, that commitment to strength pays dividends. Is everybody good with that? It's usually a pretty easy look. Separation between small and large. Let's see if it actually happens on a big chart. There it is right there. Strong triggers down, and then they weaken. Anything can happen, and it did. That's where the market reversed. And strong triggers up, and then they weaken right at a key Fibonacci area, and that's where the market reverses. And there it is again. Strong triggers down, breaks an area. There's one of those potential entries. Down it goes. And weak triggers right at Fibonacci support. One of the great things, guys, is you don't even have to take a trade, whoops, to start trusting this look. Just scroll back. There's your strength. There's your weakness, and there's your reversal. I didn't rehearse this. This is the live market. Strength, weakness, and it's pretty cool. It happens all day long. But even with strength, how's that for a segue? There's things that can stop the market's forward progress, guys. We call these termination conditions. And rule number 2 is designed to keep you from trading into them. Rule number 2 is the most broken rule among new users because rule number 2 is going to force you to stay patient a little bit. Termination conditions false. None of those areas that could stop a market. Guys, that means you're going to have room to your profit targets. And when you have room to your profit targets, we're going to call that a clear path. So we're going to take momentum, freight train loaded, haul and tail, and we're going to couple it with absolutely nothing in the way to create a bounce. Areas that can stop the market. These are large chart areas, guys. It is divergence high lines, and that's a magenta line that prints if there's a loss of momentum in the market. Divergence lows, the cyan line, that's if there's a loss of momentum at a low. Hot pink and baby blue for you guys that aren't color savvy. You're going to see the red line running. That's Fibonacci resistance. It can stop a market that's in an uptrend. Fibonacci support can stop a market in a downtrend. They also serve as great targets. You're going to see yellow 1-to-1s in a mid-band, guys. All of these areas are going to be on both of your time frames, big chart and small chart. On the large chart, these are where the large crowd are making decisions. These are where the men and women that control the market, that push it, that enter, that exit, they're going to enter and exit most likely at these areas. It's almost going to help you pick highs and lows. They could fight one another. They could break these areas. They can reverse at these areas. So I want you to remember that horizontal lines on a large chart, this is where the large crowd's making decisions. So to identify one as a termination condition, we're going to allow the large crowd to get there. Guys, give me a Y if you can hear me, please. All right, if you ever can't hear me, make sure that you tell me. And then Steve will know. But I'm going to tell him anyway because I like to be helpful. Probably need to reboot. If you can't hear me, too many people can for it to be on my end. And that's you too, Mike. Awesome. Well, Mike, I just had you muted for a second. I'm really playing my I'm in charge card this morning just for grins. Sorry. I'll grow up. I'll grow up. Good. I'm glad you can hear me. Guys, if you ever can't hear me, let me know, and we'll work through it for sure. In order to define a termination condition, guys, we're going to let the large crowd get there, which means that we're going to let price reach an area. This is the first step in defining a termination condition. Allow the price bars to get to resistance. Allow the price bars to get to support. That's what sets off the decision-making process. Once price gets there, you're going to ask yourself, where are my triggers? And if price reaches resistance and both small and large triggers remain below resistance, resistance is a termination condition. And if price reaches support and both small and large triggers remain above support, this is a termination condition. And rule number 2 says absolutely no trades into the area because that area could create a bounce. There could be a fight between the buyers and sellers. It could break, but the reality is I don't know what the reaction is going to be, and more often than not, it's going to pull me out of a trade with a loss. So rule number 2 says absolutely no trades into termination conditions. Price reaches the area, triggers remain below resistance, they remain above support. Now, if we're waiting for a clear path, if that's what our rules say, there's 2 ways you're going to end up with a clear path. The most common way when areas break is you're going to see both small triggers and large triggers get above resistance. Once that happens, resistance becomes support and your path remains clear until you reach the next area. This is what we call a breakout of a Fibonacci area. You'll notice there's one of those tails, a potential entry with momentum after the breakout. Another way you'll get it is from a reversal. So price reaches resistance and the triggers remain below. Everything reverses and heads the other way. And there's a great example. With all that momentum, there's that tail. You'll notice that price has not reached the next area. We're done with the area that was creating a problem. So two ways to get a clear path: breaking through Fibonacci area or reversing from Fibonacci area. And guys, once you have a clear path, your path remains clear until you hit that next area. The easiest trades, the easiest money that you'll ever make is with momentum and path, guys. When you have strong triggers, the path is clear, there's that potential entry for the long trade, and it takes you all the way up to Fibonacci resistance. And then over here, once you have momentum, once the path is clear, there's your potential entry. When we talk about entries, you'll see how that tail works, and all that momentum carries you right to the next Fibonacci area. And that's kind of the goal for those termination conditions. This is crude oil in a live market, and I'm going to take a picture real quick. And I want you to see why it's so important to learn termination conditions, because weak triggers at fibs, and that's where a reversal happens. Strong triggers into a fib, that's where a reversal happens. Weak triggers into one-to-ones, into a divergence high. Here at support. Guys, what you're going to find is that termination conditions, more often than not, stop the market. And every now and then, it's going to break and give you an opportunity to find a way to capitalize. So when we talk about termination conditions, guys, it either is or it is not for the brand new users. And when you get comfortable with defining a termination condition, should take you a day or two of study. Defining a clear path, once again, maybe a day or two of study, you're going to start finding ways to capitalize when those areas are breaking, when they have the potential to break. That's going to be the second trade on the plan that I give you. So is everybody good? This is it. Large chart leads the way, guys. Termination conditions have been stopping the market in its tracks for years. Look at this. Odds favorable into support, right back to resistance, right back to support, right back to divergence high and resistance. Holy smokes. Rule number 2, keeping you out of consolidation and chop. Guys, it is going to force you into complacency. It's going to force you into patience, and that's okay. 90% of your day can be doing nothing, because once you find a way to capitalize with momentum and path, you're going to be just fine. There is one termination condition that happens on a small chart. Guys, this is using that small chart to help you see change that you're not going to see on that big, slow, broad stroke of a brush chart. This one bar says that, man, everything is down, the market's moving, there's momentum, we could break this area. And then your small chart prints 3 divergences in the same price range. And 3 divergences in the same price range is a termination condition on a big chart or a small chart. You'll see it first on the small chart. And when you see this, you have to say to yourself, the market could bounce, there could be a fight. Well, there is a fight. You're actually witnessing it. No more short trades. And guys, this is the only termination condition on a small chart that's going to keep you out of a high probability trend trade if you have the advantage of momentum and if that path is clear. So we've gone through the large chart already. You guys are doing great. And we're looking at a big slow chart, the most current bar. And you guys have decided that you have the advantage of momentum and that the path is clear. Once those rules are met, it's time to find an entry. And your entry is specific, guys. It's very precise. And your entry is so precise that you're going to use a limit order. You are going to wait for the market to come to you, and you're going to use that limit order to buy or sell a pullback, meaning that little retracement, that fight that the small crowd is giving. And you are going to buy or sell that retracement right at an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way those areas can stop forward progress on a large chart, guys, they can stop it on a small chart, create a bounce, and send that market rocketing in the direction of the momentum and path that you have established. And then you're going to make sure that those areas are inside of triggers, guys. So it's a mouthful for rule number 3. You're going to buy or sell a pullback at an area inside of triggers. And this is where the precision comes in. And this is where that refinement tool really pays dividends, because inside of one of these bars, when the rules are met, you're going to see a reversal, a pullback, a bounce, and continuation. And it's this refinement process. This is what's going to allow you to reduce risk. This is what's going to get you in furthest from your targets. And guys, that pullback to an area inside of triggers when the rules are met is the top of that tail for a short trade. It's the bottom of the trail for a tail for a long trade. So we're going to go through it again. Large chart leads the way. Large chart says go. Large chart says find an entry. On the small chart, everything is screaming down. So we've got to let the small crowd fight. And the reversal bar starts the pullback. The reversal bar begins the retracement. The reversal bar is not your entry, though. It's too far away from the entry point. So the reversal bar is going to have you looking to see, well, where is that retracement most likely to go? And it is most likely to go somewhere from the bottom of the large triggers to the top of the large triggers. Your entry chart has 2 sets of large triggers. We call them large and synthetic. There's just the large triggers from the large chart, and it's the large triggers from the small chart. So these large triggers are your synthetics. These large triggers are native to the 5-1. And what they do is they work together to show you where those up bars are most likely to go up. And then once you define your retracement zone, you're going to look for the areas inside of triggers. Because areas inside of triggers are the point where the market is most likely to bounce, where the small crowd is most likely to fail, where the continuation with the large chart trend is most likely to happen. So in this case, we have a mid-band. It could be a mid-band, it could be fibs, it could be yellow 1-to-1s. You have one area inside of triggers. This is where the market is most likely to bounce and continue with the large chart. Your job is to activate a limit order a couple ticks below that area. And this becomes your entry for the highest probability trend trade. Any of the areas beyond the trigger lines, beyond the areas likely to create a bounce, guys, these aren't a part of your little window. These aren't a part of your entry. These are actually where the advantage of rule number 3 is no longer in play. If the market can push through the retracement zone, if the market can push through the areas inside of the retracement zone, your advantage is no longer there, guys. I call this the wrong side of the triggers. And once you get to the wrong side of the triggers, you don't know if or when that market is going to continue down. In an uptrend, everything's going up. The large chart is green, the triggers are strong, the path is clear, and you're waiting for the market to go down on a smaller, faster chart. I know it seems counterintuitive, but this reversal bar is the beginning of the fight, the beginning of the retracement. It's not your entry. It has you looking for those large and synthetic triggers so that you can define where that retracement is most likely to go. And it has you identifying fibs, mid-bands, and yellow 1-to-1s inside of those triggers. This one has 2 areas. It has a mid-band, it has a yellow 1-to-1. So we've created a window. It's a range where the market is most likely to bounce. It could bounce from the top, it could bounce from the bottom. We don't know for sure, but because of the large chart momentum, because that path is clear, you're going to activate a limit order 2 ticks above the highest point of support, understanding that anything beyond those triggers, beyond those areas, outside on the wrong side, this isn't a part of your window, guys. This is where the market shouldn't go. This is where the advantage is gone. And you're actually going to use that concept, the idea of being able to identify where the market is most likely to continue. It defines where the market should not go. And this is where initial stops are going to be placed. You're going to set a stop 4 to 5 ticks beyond those triggers where the market shouldn't go. And you're going to say to yourself, if that small crowd wants me, they're going to have to come and get me. because I've got a retracement zone clearly defined. I've got areas to create a bounce clearly defined, and I refuse to exit this trade until my advantage is gone. And here's the kicker. Anything that wins 70 to 80% of the time, guys, it's obligated to lose 20 to 30% of the time. And your stop will get hit. But because you understand where the market shouldn't go, your losses will be smaller. And guys, it's a normal part of a positive equity curve. It's just a normal part of doing business. It's a cost of doing business. So over the next week or two, if you're brand new, this is the pattern that you're studying. Good morning, Wayne. Good to see you. You're looking for momentum first, insisting on momentum first. You only have it if you're trading with the trend. You're making sure you have a clear path, or at least the potential to break. And guys, then you're going to look for the pullback to the area inside of favorable large triggers. This is what it looks like on a large chart. You're going to be able to go back and study this. When the rules are met, circle the tail on the large chart. Does it line up with areas inside of favorable large triggers? That's your pattern, guys. This is how you're going to study this. You won't even have to be in a trade to make this happen. When you're deciding to look for an entry, the market will be trading all the way up here at the top of that bar. And you're going to say to yourself, well, there's just no room to trouble. I don't want to take a trade for 70 bucks, 80 bucks. Remember, guys, the top of this bar is the beginning of the pullback. The entry for this trade is at the areas inside of triggers, which means that if your stop goes where the market shouldn't, whoops, wrong one, you have the least amount of risk. And that also means you've got the most room to get back to trouble to take profits. So this pattern is exactly what you should spend a little time studying. And we're looking, and you'll notice that on a Monday morning, I don't see any of those tails with the rules met until I come back here. So if I circle that tail on a large chart, and I minimize my chart, and I open up my small chart, and I look and say to myself, where does that circle line up on this smaller, faster chart? And guys, that circle was in the middle of the night. They're just getting woken up. But there it is, pull back to resistance inside of the retracement zone. Guys, this is your pattern. This is how you're going to find a way to capitalize and get paid, taking advantage of this momentum, looking for areas that are broken, areas that have the potential to break. There's a pretty good look. This was Friday, and let's see what that one looked like. And there it is, pullback right to support inside of triggers, guys. Is everybody with me? This is what we're talking about. This is your pattern. You should go back and circle these tails, see where they line up, and start writing your rules on here. Every time you take a trade, every time you take a picture, address strong triggers, talk about the clear path, the potential to break, or the termination, guys. It's always one of these. If you're a brand new user, you want that clear path. That's rule number 2 met 100%. Whoops. If you are a more experienced user, the second trade that you have is that potential to break. And then finally, use this phrase every time you annotate a chart. And what it does is it sets you up to find the best entry. Did I get a pullback? Use all the words. To an area, go to that caps lock. Inside of triggers. And here's the deal. If you can answer yes, you found the high probability trend trade. This is your pattern. Take it. Open up your spreadsheet. Start building your plan. Drop that picture in there. You can do a hyperlink. You don't have to. I'm kind of OCD. I need that hyperlink. This is my long trend trade. Study in the morning. Set yourself up for success. And guys, that's the high probability trend trade. This is what we talk about every morning. 3 rules on 2 charts. And now the part where I give you everything that you need to be successful with the software, starting with Chart Reading 101. And Chart Reading 101 is just a way for you to get good at recognizing those core advantages, momentum and path, the 2 things that have you looking for an entry. Once you can identify these and identify them quickly, it slows the market down. But even more so, once you understand path and momentum, guys, you've got everything you need to build a plan outside of this very basic plan that I'm about to give you. So go take 25 pictures each. Becoming a confident chart reader is easier if you stop worrying about the trades for a week. Take 25 pictures of strong triggers. And when you take that picture, annotate it. Why is it strong triggers? Well, it's strong triggers because the background is green, the small and large are green, the smalls are above the large, momentum, strong triggers, or triggers, rule one met. And guys, that's your look. That's always your look. So if you do that, if you go through and you commit to 25 pictures each, strong, weak, clear path terminations, you're not going to make the mistake of accidentally trading without strength. You're not going to make the mistake of accidentally trading into a termination condition eventually. You may choose to, but it won't be because you don't understand the look. So post these pictures in your spreadsheet, guys. Start filling it up. Take it. That is only 100 pictures. It'll take you 2 hours tops if you're a slow typer. But what happens is you're creating that correlation. This is what I see, and this is what it means to me, strong triggers. That's my commitment to take a trade. Weak triggers, I choose not to enter the market with weakness. So that's the first step. Get that done. Here's your cheat sheet while you do it. This is the high probability trend trade checklist. This is the best of the best. This is the highest probability trend trade you could ever take. So the first one on the checklist isn't even a rule. It says, hey, is the market coming from a strong top or bottom? And what that means, a strong top or bottom is a no triggers through termination. Price reaches resistance. Absolutely none of the triggers break through. It never had the potential to break. Price reaches support. None of the triggers get below support. It never has the potential to break. And then that termination condition, that reaction from the large crowd was so impactful that it reversed the market, that it made those large triggers go from green to red. Guys, if you have a strong top or bottom, support makes those large triggers go from red to green. This is the precursor to the highest probability trend trade you could ever take. This is rule number one for the second trade on the plan I'm going to give you. This is rule number one for momentum trades, for HVA trades, for breakout trades, guys. Strong tops and bottoms. But rule number one says odds favorable trigger momentum. OFM, strong triggers, separation between the small and large, sitting on your hands when it's weakness. Rule number two, do I have a clear path? Are my small and large below support? Is my path clear? Have I not reached the next area? Or is it a termination condition? Did price reach an area with my triggers still above or below? Or, and guys, here's your second trade, does it have the potential to break? This is what we call a 50-50 look. This is small triggers through the area, large triggers still above. As long as you have momentum, it is showing you the potential to break. You can take these trades, but they have to be managed assertively because it's only potential. And then finally, defining your entries, guys. Exactly where the market is most likely to continue, precisely where to put your limit order, exactly where the market should not go. Then the second page is the actual checklist. And print this out, put it on your desktop. This is a checklist that nobody in the history of this checklist, when all 4 boxes were checked yes. Truthfully, of course, the rules had to be met. You can't just phone it in. But nobody's ever done worse than 70% with this checklist, guys. And this checklist is designed to increase your chances of success. This checklist is designed to build confidence and trust. And this checklist is the same checklist that you're going to find on the KISS plan. And the KISS plan is going to be your roadmap as you begin trading, as you start to turn these advantages into rules, guys. And this KISS plan is a stepping stone. This is the beginning. This is the one that's been proven to win more than it loses. And it's designed to optimize your chances of success with the high probability trend trade. Through simulation, study, class feedback, continuous practice, you're going to be able to create your own plan. You will be able to see more things, do more things, manage differently. And it's all going to be based on your ability reading the indicators, guys. The better you become at chart reading, the more efficient you're going to become at day trading. So there's two things that you have to know before you sit down and you're not on simulator. And this plan is designed to give you those things. First, you have to know why you will enter a trade. You have to know your rules. You have to know them by heart. You have to have them written down on a piece of paper. There's no such thing as a mental plan. Um, and the only reason you're entering a trade is because those rules are met. And those rules are describing a pattern that's been proven to win more than it loses. Um, you are going to verify it. You're going to go back and circle those tails, and you're going to create some trust. You're going to go take pictures of momentum, and you're going to see how the market continues, and you're going to take pictures of termination conditions, and you're going to understand how it can stop a market, and you're going to be able to pinpoint your entries, guys, and you're going to be able to say to yourself every time you enter this highest probability trend trade, because the rules are met, that you're likely to win more than you are to lose. And what that does is that helps remove the emotions, because you know that you will lose. 2 or 3 out of every 10, you know it's going to happen, which means that you're going to be more focused on the execution of the method, more focused on the process than you are the results in the beginning. And that's what's going to bring the results. But you also have to know why you're going to exit your trade. And this is what you're working through as a new user. This is what you're working through on Simulator, guys. Exits are either taken at profit targets, whether it's a key area, whether it's a predetermined dollar amount, or when the advantages that you had to enter the trade have gone away. And this is why simplicity is so important. Because if there's only 3 advantages getting you into the trade, it's easy to recognize when one of them is gone. The more trades you take, the more advantages you're looking for, the more rules that you have, the more confusing management can be. So I encourage you guys, as brand new users, keep it focused, keep it simple, focus on one trade and get good at it. You have to define your entry, because great entries create manageable trades. And then once you're in the market, you've got to manage it. And this is where things get a little scary for most people. Management terrified me in the beginning, because every time I entered the market, no matter how much I was following rules, I hadn't developed the trust yet. So I was fearful and I was afraid of giving money back. This KISS plan was written to help curb that, to help remove some of those emotions. And the KISS management plan is designed to help you understand and trust stop placement. And it's focused on getting you paid, guys, because that really is the goal of everything that we do, is to put more money in the account than we allow them to take out. You will craft a plan tailored to your personal goals based on your experience reading the indicators. The more time you spend in the market, the more you're going to see, the more patterns you're going to see, the faster you're going to see advantages going away. And that's what's going to help you build a management plan. But until you can, let your management be very mechanical. Let it be very pragmatic, very emotionless, very if-then. That's what the KISS plan's designed to do. It's based on 2 contracts. That first contract is 100% designed to get you paid. The second contract is to help you develop a little bit of trust with that large chart. But this management plan is 100% dependent on you understanding entry. So focus on entries. Give it 5 days, guys. I mean, just get in there. Circle those tails. And if your entry is 2 ticks below resistance inside of triggers, then the initial stop is 4 to 5 ticks beyond the triggers. That's where the market should not go. And you're going to know your risk. You will know your risk before you ever enter the market. When this market is coming down this way and you're looking at areas inside of triggers, you'll be able to say to yourself, I know exactly where my stop goes if I get an entry. So if your entry is 71.34, your stop is 71.49. This means you have $150 per contract of risk. If you're not okay with $150 worth of risk per contract, it's probably better to simply not take the trade. You have to make that decision for yourself. But if you put a stop in the retracement zone, it's likely to get hit. You're going to watch the trade go without you. If you put it at areas inside of that retracement zone, inside of triggers, man, if I had a nickel for every time I've been stopped out to watch it scream in the direction of the large chart, I wouldn't have to trade. I'd have a lot of nickels. Your targets are predefined at $100 and $200. I want you to avoid the temptation, guys, of doing anything other than this very mechanical approach. So if you don't get stopped out, it means that you're going to get that reversal bar, that confirmation bar. And if a reversal bar prints in the direction of your trade, you're going to redefine where the market shouldn't go. Your new stop is 2 ticks above that reversal bar, because this reversal bar is confirming that now the market's going down with the large chart trend. Now the market's going down with the large chart momentum. Now the market's going down with that clear path. And now it's going down from the area inside of those triggers where it's most likely to go down from, guys. And now you have $30 risk per contract in this trade. Because of your grade entry, you're risking $60 instead of $300 now. Doesn't guarantee a winner, but what it does is it says, hey, if things go south, we're not giving very much up. Your targets are still at $100 and $200. We're not going to change that. If they don't come stop you out, and they will every now and then, it means it went to your first target. First contract is designed to get you accustomed to making money. If price reaches your first target, guys, one contract is automatically removed. Those funds go into your account. And with one contract remaining, you're going to move your stop to break even. You now have no risk on the trade. You have money in the bank. You have no fear. You've been paid. And that is designed 100%. That's my phrase today, I think. To remind you that you wouldn't even be in a short trade if it weren't for odds favorable momentum. You wouldn't have even considered going short if it wasn't for that clear path. So we're developing just a little bit of trust in that large chart with the second contract. And if they go the distance, guys, if they make it to that second contract, that's a $300 trade. $300, that's it. For 2 to 3 minutes of your life. That is not a lot of money, right? That's not enough money. But guys, $300 a day, if that's the best you do, is a $75,000 a year. Add a $100 trade in there. You're in 6 figures, guys. The goal, and I've got something really cool to share with you guys this after the first break. The goal isn't to make all the money every trade, but rather to make a little bit of money consistently each and every time, guys. Base hits pay bills. And when you reach your profits consistently, that's what takes you to that long-term goal. That's what changes your career path from whatever it is you do now to professional day trader. So realize that you don't have to be in every move. You don't have to be the first one in, the first one out. The goal is to make money consistently. I'm giving you right now, dropping it into the chat box. This is called Everything You Need. I promised you that, right? So inside of the Everything You Need file is the PowerPoint that I use to teach every day. So you have all the descriptions, everything that I use for educational purposes. You have Chart Reading 101. I will encourage you to not skip this if you're a brand new user. 100 pictures does not take long. If you go through the drill of creating that correlation between what you see and what it means to you, the market will slow down. You'll recognize your advantages quickly. And most of you will get to the point to where you're like, man, if it takes me more than 5 seconds to know that it's time to enter a trade, I'm probably breaking rules. Inside there will be the high probability trend trade checklist with the checklist and the pictures, the KISS plan, giving you entry, management, and then the second trade, that 50-50 trade, that potential to break trade. Inside will be the daily goals, because I want you guys to stare at that every day and realize that you don't have to make $1,000 a trade to be successful. It also has exit conditions in there, guys. This is for when you start growing a plan. Name your trade. I want you to do this. Name your trade. What kind of trade am I in? Well, I'm in a high probability trend trade. So I know exactly what it took to get me in, which means I can identify when the good stuff goes away. Initially, it's going to be the KISS plan rules, but you'll grow as you grow. But if you take a 50-50 trade, the second trade on the plan, it has different rules to get you in, which means there's different things that'll take you out. And the more trades you add, the more likely you are to confuse entry and exit rules. So get really good at one thing first. There's also something in there that says the pictures you can take. And the pictures you can take, these are the pictures that I take. Good morning, Miss Cindy. Great to see you. I always take a picture before I take a trade. I don't bother annotating it. All I'm doing is I'm saying, hey, are my rules met? And I'll go back and look at it because sometimes, because we're human, we miss something in the chart read. And if you go back and look at it, you can say, oh man, I didn't even see that termination condition. I'll do better next time. During the trade, I've been known to take up to 10 pictures. I'll take pictures every time I move a stop. I'll take pictures every time I take profits. And I'll come back and I'll look at this one, and this is how I develop my management plan. When I could have held longer, when I maybe needed to not hold so long. I'll take a picture after the trade when the trade is done. And this is where I go back and I write my rules on the chart. This is where I put those three things: momentum, path, and entry. I define what it takes to get me in, and I assure myself that I'm following those rules. Um, this is the picture that I'm going to put in my trading plan when I do it right. I'm writing a recipe for success. And then one of my favorites, and some of you guys are really good at this, take a picture when your rules aren't met. Instead of taking a trade when the rules aren't met, take a picture when the rules aren't met. Talk about, hey, my rules aren't met. I don't have momentum. This isn't a clear path. There's no areas inside of triggers. And what happens is you're reminding yourself that your rules are your lifeline. Your rules just describe that pattern that's been proven to win more, and that your highest chance of success comes from having that edge. Pictures 3 and 4, guys, those are the ones that I want to see in the room. I want to see the trade, the advantages, start to finish. If you're working on management, make sure you write your management rules on there. Let me know what you're doing. And then the ones where there's no trade, drop them in there. And I want to show you why. And I haven't done this for a while, but I'm going to do this today. If you guys feel like your rules aren't met, take a picture of it, drop it in the room, because what happens, let me pull up this picture. What happens is very often people will say, well, Mark, I had divergence, so I didn't take the trade. And what that does is that opens the door for me to remind you, hey, it takes 3 divergences when you've got this look on the large chart. You'll be like, oh my gosh, I've been missing so many trades. Some people will say, but Mark, the trigger line colors don't match on the small chart. The small triggers are against me. And I have to remind you that without that little loss of momentum here, we'd never get that pullback. And your large chart never gave up that advantage of momentum, and that's where momentum is found. So very often, guys, what you're going to find is that these I'm not taking the trade looks are the ones that are going to help you find more trades, because you're going to realize that you're overthinking, overanalyzing, that you're creating your own set of rules rather than the ones that fit the plan. I see a lot of exits at one divergence line on a small chart, people giving up a lot of money. And I have to remind you that with all these advantages, we're most likely to go to the fibs. So make sure you drop those in there. That's going to be in that zip file as well. And then finally, the last thing that's in there is Trend Trade Simple. And Trend Trade Simple is nothing more than everything that we've talked about in the last hour consolidated into 2 pages, guys. What we do, why we do it, the indicators you use, where to find the rules, how to identify the rules, and even how to study circling those tails. So you have everything you need, as promised. We've learned the trigger line and Fibonacci rules for when it's okay to trade, because there's an advantage, because there's an edge. You guys have the ability to simulate, to practice, to post in this room. I'm going to give you a plan that is simplified. It's in there for you. No, Jerry, you'll have to get that through CQG. I pay $7 a month for mine. Oops, I did $7.30. I don't know why. You're welcome. And then, guys, you have the spreadsheet, simulate, you can get feedback. And as we get into the second half of Classroom, all it is feedback on the things that you've posted. So I'm going to share this, and then I'm going to take a break. The key to everything, to all of this, to finding success, guys, is just building a foundation. And I think that the more you get away from the foundation, the more you realize how important the foundation is. And then you'll grow just a little bit each and every day. You'll get a little bit better. You'll see things a little clearer. You'll read your charts a little faster. You'll manage more effectively. And don't expect to be a professional day trader in your first week. The same way we all went to college and we had that freshman year. Guys, this is your freshman year. And in 4 years, you won't remember the paper you wrote for English 101 or the first biology. You're going to be focused on that thing that's bringing you success. So for you brand new users, I blanket you with very conservative rules. The recognition of advantages. I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. For you new users, all terminations are bad. No momentum is bad. No areas inside of triggers are bad. And these entry rules, these blanket rules are there because it increases the likelihood of success. Confidence comes from the memory of success, guys. The more you can put yourself in a position to win as a brand new user, the more likely you are to be a professional day trader a year from now. They're not always bad. These three core rules, they're not always detrimental. But if you get in the habit of speaking them out loud every time you look at a chart, you just build that habit. Let me identify momentum path, and then I'll work on an entry. It'll keep you out of a lot of trouble. And then just like anything, the more time you spend with the software, trading the plan, the more you're going to see it begins to open doors for you. Ron, who's not in the room today, always says that the high probability trend trade is not your get rich trade. But once it becomes second nature, you're going to see the opportunities behind it. You're going to find those trades. So learn the process that yields the results, guys. The results seem to follow. That's where the KISS plan comes in. If you keep it that basic, if you can follow these simple rules and be okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. And I say that going into the second hour because you're going to see men and women in this room taking trades that don't fit the high probability trend trade scenario. You're going to see them maybe fighting momentum, some of them even fighting trend. But you have to understand that they're in a different place in their journey. Don't try to trade like the people that you see. Focus on your journey, focus on your rules, focus on your charts, and don't try to keep up with the Joneses, guys. I've been watching this for years. And the easiest way to ruin an account is to try to trade like somebody that sees things differently than you. The more you deviate from simple, the longer it may take to find the results you're looking for. So keep it focused, guys. And when I talk about that KISS plan, I've had people trade only that KISS plan, that first plan, that beginner's plan, and get funded in prop firms in their first 30 days with Nexgen because they're not trying to be right. They're not trying to be first. They're not trying to stay till the end. They're simply trying to follow the process that yields results. Question everything. As this classroom keeps moving, question everything. Question entries, question exits, question other people's charts if you want. That's great. I want you to learn, but give yourself a little grace. Don't put the pressure on yourself to be a pro trader when you're a freshman in college, guys. So I'm going to take about 5 or 6 minutes. And when I come back, we're going to start looking at the charts that you guys have posted. We're going to talk about your chart reads. I don't believe you better, Dad. I'm calling bullshit. Put a picture in the room. Put a picture in the room. Tell me why it's a strong uptrend. Educational room, right? Guys, shouting out what you think the market's doing doesn't do anybody any good. Why is it a strong? Why do you think that's strong? My small triggers are inside of the large triggers, aren't they? Define it. I know that's a pain in the butt, guys, but if you try to make everything you do an educational lesson, if you try to make everything you do a repeatable lesson, you'll be able to start repeating the lessons. But you're right, it's 30 bars the same direction. It is a strong uptrend, better Dad. Don't be afraid to drop the picture in the room. Tell everyone else why, because nobody has any idea what you're talking about. When you guys try to take the role of teacher a little bit in your annotations, you'll become better students. I'll be back in about 5 minutes, guys. Go relax, go stretch your legs, get a drink of water. When I come back, we'll start looking at all the pictures you guys posted. See you in 5. All right, y'all. Here we go. Second hour. Better dad. I'll. Sorry, man. Gotta get you. I love this. Strong uptrend, but no odds favorable momentum. These are fake outs for those who, like me, have fear, think they could take it, maybe in time, but not my money yet. Better dad, this is awesome because what this does is this opens the door for a lesson. And I want to give you that lesson. When you have a strong trending market, so we're going to define a strong trending market real quick. I'm going to open up my large chart. And I'm going to trade pictures with you, Better Dad, because you took the time to do the work and tell me what you saw. I'm going to do the work and tell you how to take advantage of this. So a strong trending market, this is for everybody. 30 plus bars in the same direction. On the large chart, I got to put that in there, right? With no reversal bars. Bonus multiple fib areas broken. So during a strong trending market, guys, one of the things that you're going to see is you'll see the small triggers riding the top of the large triggers. Small triggers will ride large. You'll see what people call the train track look. The dashes from the large will be seen. If you have a strong trending market, Better Dad, if you see the train tracks, rule number one is met. But here's the deal. Strong trending markets end. They do. They eventually end. So to trade it, most will buy the small chart midband until it stops working. It will stop working eventually. Does that make sense, Better Dad? So what you did is you said, hey, Mark, check it out, strong trending market. I can't find any opportunities. And I say, Better Dad, dig it, man. We can call this momentum. And now let's go back. And all those things that weren't opportunities for you, let's circle them. Now, you can't just arbitrarily buy in determination conditions, right? You still have to at least have that potential to break. So let's just look at this last one. Strong trending market, clear path. What did it do? It pulled right back to the midband. Buy the midband until it stops working. Still strong trending. There's your midband. Some could argue that this is where it stopped working. And once it stops working, well, we may get a retracement a little deeper. We may see them testing the large chart areas. Pretty cool, right? So this is one of the great things about the software. Yeah, 3 divergences too. Nice recognition. What a great indication on the small chart that that large chart strong trending market might be ending. Good eyes, Better Dad. So what happens, guys, is you start off, and the only way you'll ever take a trade is with odds favorable momentum. And then you're like, wait a minute, I've seen this, I know this, I've studied this. There's more going on in this market than the market is giving me in that first look. So great stuff. And guys, that's why I always say, and Better Dad, you're a great sport, and I appreciate it. Don't just shout out, right, into the room, that's a blah, blah, blah. Show me the picture of what your chart read is. Let's make sure that I understand what your thought process is. And guys, I'll give you everything in my arsenal. I'll give you everything that I own to help you become a better chart reader and maybe find more advantages. So good stuff. Thanks, Better Dad. Now that we're neighbors, got to look out for each other, right? And you guys know I have to show this. For those of you that weren't paying attention, I am now in Western Washington. My wife and I are here. She has her first day of work coming up pretty soon. That was the sunset. We got a one-bedroom suite at the hotel here. That was yesterday's sunset. Beautiful. Eastern. Did I say Western? 30 days on the road. Sorry. Yeah, it's Eastern. It's a different world over here than it is Western. That's the rainy side, yeah, without a doubt. So I'm so stoked to be here. Guys, this is one of the things that day trading does for you. Being able to do this, you can do this from anywhere. I have taught this classroom from probably 10 different states. I've day traded from at least the same. So one of the things that you can do when you get good at this is you can do it from anywhere. All right, let's see what Pete's doing this morning. Pete loves to give me multiple charts. And guys, you should get him on your Christmas card list because Pete loves to give you guys lessons too. First trade of the day, it's a warm-up trade in sim, strong bottom, triggers rolled, odds favorable momentum, not a clear path. And that's exactly what he's saying. That's not a clear path. That's a divergence high. Price reached the area, all triggers through. And Pete, even though he took the trade, he used his chart reading. He used those core advantages so that he could say to himself, this is not the perfect trade. I'm going to have to be a little more aggressive than I might be if it were a high probability. But you'll notice that he took a pullback right to the area, right at the triggers, and he was able to make quick money before that termination condition created failure. Nice trade, Pete. And look how that termination condition worked, guys. Completely reversed the market, made it a strong top, created odds favorable momentum, and look at his annotation. Clear path, odds favorable momentum. He didn't even wait for a pullback to an area inside of triggers. He JTFI. That's the JTFI entry. That's not taught by Nexgen. But when I talk about once you guys, and this should like be exciting for you guys, once you can identify momentum and path, once you can look at your chart on the large chart and say, yep, this is happening right now. It's 100-mile-an-hour semi, and there's nothing in the way. It's going to be hard to stop. You'll find a way. And when I say small victories, guys, base hits pay bills. He's in at 29. He's out at 19 on 2 of them. That's $200. The other one's out with a loss of momentum at 23. So another 2 at what, 160? Guys, it's about a $400 trade. And the timestamps barely blinked. That's a $320 trade. My math stinks. Momentum and path. When I say learn those two, commit to those two, guys, there's a reason. Odds favorable momentum directly into the termination condition. And there's a little bit of a bounce. Oh, you went short? You were trying to close the gap? I gotcha. And when it didn't work, you got all your money back. Nice job. So when Pete says trying to trade the gap theory, the gap theory, let's talk about it because it defines the mid-band as a termination condition. And this is that one I said shows up on the spreadsheet a lot. So the gap theory is if price accelerates and reaches a mid-band, a Fibonacci area, 1-to-ones, guys, if those large triggers are a full bar away, the market is more likely to close that gap than not. The price is more likely to accelerate back to those large triggers. Price returns to the large triggers. That's the same reason that we find those great entries. So Pete in his trade said, I reached the mid band and the large triggers are a full bar away. I'm going to try to go short back to him. And notice he's going short against trend. He's going short against momentum. He's going short against every indicator on every chart for the pattern. So this is where I tell Pete, if you're coming from a strong bottom, the gap theory is less likely to work because the decisions made right at this key area were so impactful that it sent the market screaming up. This is the sellers losing, the buyers winning. I don't know. So if you're gonna try to close that gap, some sort of slowdown, not finding odds favorable, but it's that strong bottom that makes me less inclined to try to close that gap. Good stuff, man. Great trading, Pete. Appreciate you posting in the room. Not a lot of pictures today. Is the market moving slow? Technically not a strong top, but it's odds favorable. There's nothing in the way. And then once again, you find a way to get all the way down to the termination condition. Absolutely beautiful, Pete. Momentum and path. Does everyone remember when I said, and I don't know that I said it, I've probably never said it before. Once you have momentum and path, guys, this is where the easy money is made. This is where it's difficult to stop the market. This is where you guys are going to find opportunities trading away from fibs with momentum and going to the next area, guys. This is the easiest money that you'll ever make. These are the highest probability scenarios you're ever going to see. Great job, Pete. Awesome trading this morning. All right. Mr. Wayne. Whew. There's that gap theory. Gap off a weak bottom. Strong triggers with the one-to-ones assist bounce off the mid-band. So here's a great example of that gap theory. And it's the weak bottom. And Wayne, I like that you put weak bottom in there because it kind of goes back to what I just said, right? When it's a weak bottom, it's even more likely to close that gap. You get in on the other side of the small triggers. Your large triggers are not only a full bar away, but they're also still down. And you catch that gap all the way back, close them to the large triggers. Really beautiful trade. And the gap theory is just a pattern, guys. And it's not a trade that I even teach. But you guys that have watched these patterns, that have learned these patterns, you've seen it so many times. You're like, there's got to be a way to capitalize. And Wayne, you did it awesome. Here, so termination condition, triggers roll, and you take a momentum style. Didn't hang out long enough to be here. That happens. Perfect momentum style entry. Out at trouble. Nothing changes. Out at trouble. This is great. So guys, this is the way you take care. This is what we call a momentum trade. This is in the user guide. It's available for you to learn. I'll help you with it if you need it. And it starts with a no triggers through termination condition, guys. That's the best of the best look to go the opposite direction. Wayne lets his fast triggers on his range chart go up. Notice that his large triggers on his small chart turn. And these have turned. And he's just taking that momentum and just popping it right up. Just such a good trade, Wayne. Nicely done. All right, Miss Cindy, your husband's trade. So Cindy, the first thing I want you to do is I want you to tell your husband, hey, Mark charges me $50 a pop to look at your charts because you're not here. And then have him give you that $50 and go buy yourself something pretty. Take yourself out to lunch. Just kidding. All right. Clear path, 100%. And then better dad, there's that strong trending market, right? And let's see. Odds favorable, momentum. This trade reaches the target. It was never executed. You closed it out by yourself. Okay. So this is perfect. Strong trending market. Clear path. Sell the mid-band till it stops working. And it didn't get him at the fib. Probably tapped it and then headed up. Great trade. Cindy, high five him. Awesome trade. Andy, you're with your dad today. Haven't even opened your laptop, cell phone, trading view accounts, funds, not up to stuff. No worries. Go enjoy your father, Andy. I'll be here tomorrow for you. That's pretty cool. This is one of those things that are going to happen in the room as well. is we're going to have a lesson earlier about strong tops or strong trending markets, and then you're going to see someone come through and execute it perfect. And you're like, oh my gosh, Mark just talked about that. People are doing it in real life. Clear path, rules not met, weak triggers, termination, sit it out. Who am I looking at here? This is Joel. Right on, straight into a fib. Just no reason, right? Don't have the momentum, no clear path. You did back here, but not anymore. Just gonna sit back, relax. I love this, guys. This is that not my trade look. This is the I don't have to take it into a termination condition to be successful look. Great job, Joel. Oop, better dad, we saw that one. That was our lesson on strong trending markets. Miss Cindy. 50-50, odds favorable momentum with the potential to break. You take the perfect momentum trade. Small triggers break. On the small chart, snaps right back to the fib, and you take it right up to treble. Absolutely beautiful momentum trade, Cindy. Strong bottom, strong triggers. And guys, this is that breakout. When areas break, there's a breakout opportunity. It looks like a momentum trade. And it even gave you a second chance if you didn't catch the perfect one. That's awesome. You know what's fun for me, Cindy, is a year ago, 6 months ago, you were showing me 176 trades a day. You were showing me every nook and cranny, every bounce, and now it's just so calculated. I love it. It's a process, right? It's a journey. At first you're really excited, you're chasing everything, and then you realize that you don't have to make more money than you could ever spend. You just have to find the best trade. So great job. And on that note, because we're out of pictures, guys, let's look at the live market real quick. Whoops. So this is crude oil. And despite the momentum, crude oil is trading directly into a termination condition, guys. Resistance is hit. Triggers haven't broken. And this is your sign to say, hey, let me pause for a second. Let me see what's going to happen. It's either going to break or it's going to stop it. I don't know what it's going to do because it stopped here and it stopped there. I'm not going to be so presumptuous to think I can predict the market. Rules not met. Sit on your hands. And then here we get a termination condition. Absolutely. And that termination reversed the market, and that reversal created odds favorable. And then better dad, the first step in the lesson. How do I identify a mid-band as a termination condition? So when we're doing termination conditions, everything starts with price reaches the area. So mid-band is a term. My goodness, price reaches the mid-band. Where are the large triggers? Sounds familiar, doesn't it? If the large triggers are a full bar away, it's a term. If they are not, it is not. I did, Wade. I can go over them again because we'll actually use this one. Oh, I'm not done with you, Better Dad. What we're doing is we're just defining what the rules say first, right? Because when you go study this, you're going to write these rules down so that you can identify it. Does that make sense? So in order to study something, you have to know what you're studying. So now we know what to study. When price reaches the midband, I've got to check the large trigger location. And here's a great example of it. When price reached this midband, do you see how the large triggers were so far away? And look what price did. It came right back to them, snapped back. So if price reaches the midband and the large triggers are a full bar away, that midband was acting as a termination condition. So was Fibonacci resistance. And Wayne says, look at that, because this is a pattern, the gap theory, I can capitalize. And Wayne, all I did was toot your horn on this one. Great usage, weak bottom. That was the biggest one. Because it was a weak bottom, the gap theory was most likely to hold true. And then Wayne, this one was just awesome usage, momentum trade off of a strong bottom. And it was perfect. A little late, and you knew that it was a little late, but you had it dead to rights. Both of these were beautiful trades. Beautiful trades. So Better Dad, we're going to do this real quick. I'm going to open up the S&P. And it's been strong trending. So we're going to go back and we're going to define some mid bands as a termination condition. So this is the easiest way to study it, Better Dad. Price reached the mid band. There was room to print a full bar up before price hit the large triggers. Mid-band is a term. Does that make sense? So there it is historically. All right, so we're going to go even further. Let me give you this one. And I'm also going to pull up my spreadsheet because, guys, this is an awesome way to study. Are you leaving? Have a great first day at work. Make the kids play nice with you. Sorry, guys, I had to kick her out of here. She's very distracting. So I'm going to take that picture, and I'm going to go to client trades. I don't have it there. I'm going to go to basic rules, and I'm just going to put that picture in here. So I'm going to build y'all's spreadsheet a little more for you too. And then I'm going to take it one step further, Better Dad. And thank you for asking the question. Let me find the picture. Here we go. So a lot of times you're like, well, how do I know if the midband, or how do I know if the large triggers are a full bar away? Well, price reaches the midband. If the market's going up and we're in an uptrend, when it reaches that midband, your large triggers have to be below the reversal bar marker because that's where a bar will print. So if it's below the reversal bar marker, the midband is a termination condition. Let me see if I can find one going the other direction. There we go. And then if price is above the reversal bar marker when the market's coming down, that's how you'll determine that it's a full bar away. And what you can do, so you can see there that there was room for the full bar. You can literally go back, mid-band and a fib closes the gap to the large triggers. You can start to see this pattern a lot over and over when it hits a mid-band and it closes the gap. And then what's fun, and I like to do this, you'll dig it, is you'll get to a point where you begin to recognize this pattern and trust this pattern so much, you'll be like, oh my gosh, it's becoming easy to see that you could put nothing but large triggers and small triggers on your large chart. I should have done this on crude oil. And you can go through and you'll be able to say, man, I bet there was a mid-band there. I bet there was a mid-band or a fib there, because you'll see how price accelerates away and hits those triggers. And you'll scroll back and you'll be like, oh man, bet you there. Do you see how even without the area there, you can see how price seems to always return to those large triggers? It's a great way to study it. Great way to study it. And then one of the common mistakes, and I'm going to load the template back in, is you have to remember the recipe, and this is why I go through the verbiage. Price reaches, right? Price reaches the mid-band where the large triggers. And a lot of times people like let the large triggers reach the mid band and say, okay, now price has to come back to them. So make sure you understand the actual verbiage. Price reaches the mid band, but the large triggers are above the reversal bar marker. Mid band is not behaving as a termination condition right now. There's a live example of it. Does that make sense? Good lesson. I like these lessons. These are the lessons that you just pick up over time. You practice them a little bit, and then it works. No worries. Sounds good. And we can cover it every day for the next year if you want until it becomes second nature. All right, Todd, good morning. This looked like momentum until it wasn't. That's fair. So your entry was 55. Way down here. All right, Todd, I like this though. I like this. Can I be a nag for a second? You know I'm going to anyway, right? See if I can find my call out. Just for grins. Just for grins. And you'll love this, guys. I do this for a reason, I promise. I never try to make you guys do work for the sake of doing work. Every time you guys take a trade, I want you to type out strong triggers and yes or no. That's it. And I want you to type out clear path and yes or no. Because what you're doing is you're going through the process of finding a trade, right? And I want you to say pull back to area inside of triggers, yes or no. And what you're doing, Todd, is, and everybody in the room, if you take the time to write this every time, Todd, you had strong triggers, brother, 100%. You knew that you had them. They were strong until they weren't. And price reached the mid band. Small chart never says clear path. Where do termination conditions come from, Todd? Do you remember? It's large chart, right? Large chart termination conditions. So, thank you. You just made me a better teacher. But this is a good lesson. You have to know where to find your rules met, right? So, Todd, your large chart had momentum. Clear path is a yes because price reached a mid band, but the large triggers were not a full bar away. So you're 2 yeses deep on the advantages. And then Todd, there is your pullback, whoops, to your area inside of triggers. Do you see it? 1-to-1s were not inside of triggers. And this is one of the reasons that language becomes important. Because if you had said to yourself before this entry, Todd, if you had said, I need an area inside of triggers, and you said it nasally, like inside of triggers, like, oh, I'm so tired of that phrase, but it pays dividends. What you would have realized is that an entry at the mid band made sense because you had rule number 3 met. So let's review. You had strong triggers. You had a clear path. You had an area inside of triggers. You got in real early. You got a little excited. So your entry was early. Does that make sense? Because your entry was at the 1-to-1s. No worries. But here's the kicker. This is a yes. This is a yes. This is a yes. But it didn't work, did it, Todd? Was it the right trade? Was it a high probability trend trade? Yeah, no, it was. Todd, we went through it. You had strong triggers. You had a clear path. You had a clearly defined entry area. Todd, this is a trade that wins 70 to 80% of the time. This is a trade that you nailed dead to rights. 3 advantages. Little early on the entry. But Todd, there's not anybody with more than 30 days experience in this room that would not have taken this loser with you because you had everything that you needed. So if you go through that process, you'll get to the point to where you'll say, whoops, one of my favorite phrases. I know, anything that wins 70 to 80% loses 20 to 30%. Todd, this is a cost of doing business. This is a good loss. You had every advantage that the high probability trend trade pattern presents. You had everything. You had strong triggers. You didn't have a termination. Man, you even had the perfect entry and you knew where your stop went. It was perfect in every way. So what you have to do is you can't associate losses with failure. Todd, if I have a coin and part of it's weighted, and I can guarantee I flip that coin 100 times, Todd, and 80% of the time it lands on heads. How often are you going to lose a trade if all you do, or how often are you going to lose a coin flip if all you do is bet on heads every time? Because you know that heads wins 80% of the time. No worries, you're great. This is acceptable losses. And I think Wayne put that in there. Good loss. And it's a good loss because you had everything. So, and this is why I encourage you guys to write the 3 rules. Because Todd, for the new user, this is frustrating. And this is dejecting. And this is confidence zapping when you lose a trade. But with a little bit of study and a little bit of trust, what you realize is that you did lose the trade, but you lost the right trade, which means you understand the process. And I want you to see this. Here's the other thing that I want to do. Yeah, but Todd, this is a long trade with momentum, a clear path, and a pullback to an entry inside of favorable large triggers, just like you had, and it won. And hold on. There's momentum and path and a pullback to an area inside of triggers, and it won, just like you had. Same look, same entry. This one won. So one of the things, odds favorable, clear path, pull back to area inside of favorable large triggers. This one won. And Todd, once you trust this pattern, once you do some study, once you have some seat time, you're going to be excited to take that loss. And you took your loss where the market shouldn't go. You took your loss where the advantage was gone. And man, when new users show me this trade, I slow down and I go through that whole something that wins 70 to 80% of the time has to lose 20 to 30. And if you go through the process of writing out the rules on every trade and making sure that you had them, and dude, your chart read was perfect. You begin to accept losses as part of a normal equity curve. You begin to accept losses as a cost of doing business, and you're in control of whether or not you take the right losses. I love everything about this picture, Todd. I love everything about this trade, and I really hope that even though you took the loss, you celebrate the victory because you read your charts correctly. You took the correct trade, and you took it as beautiful, dude. You're doing great. Here, let me show you how much I believe in that trade. Where's it at? Let me copy that link. Let me open my spreadsheet. I'm going to put you in the study materials because this was Todd's perfect high probability trend trade short. Didn't work because that's a pattern. Look at this one. Trina's perfect high probability trend trade. Didn't work. Just because it doesn't work, dude, that looks just like yours. Just because it doesn't work doesn't mean it's the wrong trade. It just means it didn't work. We're not in control of the market. Those jerk faces are going to do whatever they want to do. We just try to trade that pattern that gives us an advantage. Cindy, odds favorable from a strong top, perfect entry, great stop placement. And then when the second divergence printed, you knew that your advantage was gone on a 50-50, and you chose to exit the trade. Great management. Great management, Cindy. Awesome entry. Beautiful management. You covered commissions on a trade that failed. Cav, everything says down, it clears the fib. Both charts say down in a strong trending market, and you say, check it out. I'm just going to ride that momentum down to the big, ugly blue fib. Really nice, Cav. And then one more. 49, 49, 21, 4. Nope, 1950. So, Cav, you are going right into a termination condition without a doubt. Do you see it? Guys, he had a strong bottom. He had odds favorable momentum, but he went smack dab into a termination condition. 100%. He had strong triggers. He had a low risk entry, and he still got paid even though he broke rule number 2. So Cav is nice enough to give us a lesson here. And I'm going to show you guys what I mean. I'm going to do 2 things. We spend a lot of time talking about advantages, which means that if every time you look at your chart, you're talking about these 3 things, and they don't have to be there, but if every time you look at your charts, you're doing this, you're saying to yourself, okay, do I have momentum? And Cav's like, hell yeah, I got all the momentum. And Cav says, but you know, I understand it, I see it, I accept it, I don't have a clear path. And he's like, whoa, that's not good. That's 33% of my advantages. Tell you what, if I can get 66% of my advantages, an area inside of triggers to give me an entry, what Cav says is with 66% of the good stuff, I'll take and manage assertively. This is a medium probability trade. And a medium probability trade means that most of your indicators agree with the rules. However, an issue exists. An issue, my friends, is singular. His issue is that the path isn't clear. But he's trading with the trend. He's trading with momentum. He's trading with every indicator up from the area inside of triggers. And he's got one thing against it. This is the bar fight. And Cav knows with all of that momentum, it's going to be hard to stop, especially if it's from a strong bottom. He says, I'm willing to take this aggressively. And look where he gets paid. He gets paid before the retest to trouble. And that's it, right? He says, I know I'm taking a chance. I'm not going to hold for a home run. But with all of this momentum from a strong bottom, maybe I can make a little money on the way up here. I'll exit, and then I'll wait for it to be better. A medium probability trade, guys. This is going to be the majority of your trades. You're going to be reliant on your chart reading to understand it. And if you go back to 3 advantages every time, if you go back to vocalizing 3 advantages every time, knowing what you're up against is going to create a lot of opportunity and give you the ability to manage. Great job, Cav. I hope you were in here to hear that, because that is such a good lesson for everybody. This is why I say it out loud, guys. These are my advantages. This is what's going for me. This is what I'm up against. And when you do that, you'll make decisions that fit your pain tolerances. And everybody's pain tolerances are different. Momentum, path, 3 divergences, 4 divergences in the same price range. Say, hey, change may be coming. Does everybody see it? 1 divergence didn't give you an entry. 2nd divergence gave you a great push to make money. 3rd divergence started the waffling. 4th divergence, and it's pushing down. This is where having confidence in your rules pays dividends. Because if you got in here at 56 with the KISS plan, guess what? You made $300 here before that divergence ever printed. Cav, I looked at the one just before it. You had this one, which was riding momentum and path. Did I miss this one? This one I missed. This one I missed, sorry. Divergence forms, roll wide. It's odds favorable and the potential to break. That's all it is. You take a great entry and you manage at trouble because it's medium probability. Nice. Pull back to the area of resistance inside of favorable large triggers. You go back down. You know where trouble could be, and you get paid again because it's medium probability, because the path isn't clear. Nice consistency, Kev. Exhibit A, clear path, odds favorable, perfect entry, get paid, make money. Joel, great job. That's the one, guys. Then the third divergence prints, and he's out. And thank goodness, because look what it did to the market. I love it. Joel, rock star. Good stuff. All right, guys, I'm going to share something with you. And then we'll take a break. So this was created by a Nexgen user. How to achieve your daily goal of $1,000. You guys ready? When I talk about you don't have to make all the money every day, this is what I'm talking about. And this is, I'm going to give this to you guys. This was created by a gentleman named Siva. Siva trades 9 months out of the year, vacations the other 3. Siva started with Nexgen about 20 years ago. And he built this, I want to say, there's a date on here. This is from 2016. 2019 was the final copy. This is based on the S&P, guys. Number of contracts, 1 contract. Building consistency. 21 ticks a day. After commissions is $239.10. Does everyone see that the number based on 1 contract isn't 1,000, isn't 10,000? It's going for consistency. If you can do this for 21 days in a row, you've doubled your account. And when you double your account, when you make that next 5,000, you add a contract. The number of ticks doesn't change, but the money made every day does. You can do it for 11 days before you get enough to add a contract. 21 ticks a day, now you're up to 717. It takes 7 days to add another contract. Once you get to 4 contracts, guys, that's it, 4 contracts. You're on day 40. You're making $956 a day. That's $1,000 before commissions. And you're not adding contracts. You're staying consistent. You could every 6 days. On day 202, end of year 1, you're making $180,000 after commissions, guys. $1,000 a day. I love this. And then it's just consistent. Fixed income, how to achieve your daily goal. At the end of year 2, that $5,000 account is at $370,000. I love this thing, guys. This is Nexgen users doing great things to help Nexgen users. I'm dropping that in the room. Who in this room, let's do this real quick. Who in this room, where they sit right now with their abilities, do you think you could make $239 a day? I feel like anybody in the room could. Could you do it every day? That's where the money comes in, guys. Being able to do it every day. Morgan, I just wanted to share that. My nephew dropped that over the weekend. Strong top, odds favorable, 50-50. You missed your entry, but you grab it on the way down with all that momentum and path, and you take it to the fib. Beautiful trade, Morgan. Odds favorable, potential to break. Miss the momentum entry off the fib inside of triggers. But you said, you know what? My expectations is it's going to make the fib anyway with all that momentum and path. Let me write it down. Anytime in NASDAQ you take the reversal? Okay. That's your right. Nothing wrong with that. That's one way. Well, it's not. There's no such thing as safe, right? All it means is that if you get in down here and your stop's up here, you take a bigger loss if it doesn't work. Right? So feel safe, guys. That's one of the funny phrases that we hear in trading. Feels safe. Well, if I take a confirmation bar instead of get into the area, it just feels safe. Well, in this trade, Cindy's trade, that might have worked out. Right? It's almost the same entry. She's a little better, little more reward. All you're doing sometimes, guys, if it's perfect, take it. If it's not perfect, Morgan, that's when maybe a little confirmation. All right, 50-50 trade. What's it 50-50 on? What market hasn't broken? So we have a termination, strong bottom. All right, I'm going to get you on language better, Dad. A strong top or bottom is defined as a termination condition that reverses the market. You are actually in before the reversal. Not a bad thing. But it hadn't even become a strong bottom yet. It was a perfect textbook termination condition. Does that make sense? It did become a strong bottom. In order for the strong bottom, the large triggers must roll to green. But it's okay. Perfect termination condition. And you didn't have odds favorable, right? Because the large didn't roll yet. So let's talk, better Dad, why this is such a beautiful trade. First, it's a termination condition. Termination conditions are amazing, guys. When the market stops the market, or when the fib stops the market like this, that's strong. And then your trigger lines, better Dad, small triggers, large triggers, fast triggers, slow triggers. Your fast triggers have already reacted and gone straight up off that termination condition. On your small chart, look what your large triggers did. They rolled. Your small chart is showing you the change that you can't see yet on the large chart. Does that make sense? You have strength, small chart showing change, and it pulls right back to a fib at those large triggers. So your entry, my friend, is right here on the pullback to the small triggers after the term. That's what it looks like on the large chart. And it looks like an area inside of the large triggers on the small chart. And what you've done, no, I don't have the picture. This is a trade, better Dad, that Nexgen started teaching in 2004. When a Fibonacci area holds and the small triggers roll, of course back then we only had one chart. It said buy the pullback to the small triggers because key Fibonacci areas, no, you didn't. How about inadvertent brilliance? When we added in the smaller, faster chart, this is what it looks like 9 out of 10 times. It's a pullback to the large triggers. So it looks exactly like a trend trade that the large chart isn't leading the way on a little bit. It's an awesome chart read, but things that have to happen. You have to have that perfect termination condition that the triggers don't go through. You have to have those small triggers up strong, and you want those large triggers on the small chart, the fast chart, to show you that change that you need to see. And you didn't have anything in the way. I love everything about this trade. Is it a high probability trend trade? Well, no, you didn't have momentum, right? So you were missing the second thing, or the first thing. Didn't have momentum, you had a clear path up, and you had an entry area. 2 out of 3, 66%. You could call it medium probability, and if something changes, you exit. Manage it assertively. Does that make sense better, Dad? So what are you doing? You're going back to the advantages every time. What do I see? What do I have? You saw it. You labeled it. Maybe you get another push down. You manage out of it. Great stuff, dude. I love this trade. And it's nothing new. This is the same thing that Nexgen started teaching in 2004 because we didn't have that small chart. We didn't have that fast chart. So we had to buy or sell a pullback to the small triggers. But it looks like that on the small chart. I love it. And then you got paid right at the fib. Beautiful. Nicely done. Nicely done. All right, guys, I'm going to take a break real quick, stretch my legs. When I come back, we're through pictures. We've made them through all of them. So if you take a trade, post a picture. If you have a question, post a picture. We can start getting into TradingView a little bit on the last half of class here. I haven't been told to officially start the afternoon class yet, so we can talk about as much as you guys want to talk about for as long as you want to talk about it. I am in a time zone where I don't even know what time it is. It's like 8 a.m. here, so I have got all day. I'll be back in 5 minutes, guys. Go stretch your legs. Almost hour already. How cool is that? Better Dad, you got your eyes on? Look at this. Strong bottom, pull back to the small triggers. Pretty cool, right? Looks just, well, a little different, but pretty close to what you did. This one just didn't work as well as yours did. Everything's patterns. And it's pretty amazing. Watch this. I don't know where my fibs are. I'm going to take this picture right here. Yeah, no worries. Got nothing but time, guys. I'm going to go to the educational material real quick and go to termination conditions. And here's something that's pretty cool. So this is the S&P this morning. This one didn't even have fibs. Price went up, accelerated away from the large triggers, came back, pivot stop out with weak triggers, reversed the market. The other picture, this picture is from crude oil in 2021, ladies and gentlemen. Crude oil in 2021. Up, down, up, reversal. And the market has a memory. The market does the same thing over and over. You're going to find a way to capitalize. You're going to find a way. Better Dad once again. Termination, snap back, right at the large triggers. Maybe there's a way to make a little money there. Maybe there's something to do. Oh my gosh, really? Termination, snap back. Well, that one wasn't quite as pretty. May not have worked. Guys, what would you like to talk about? I know there's a lot of people in this room that are like, Mark, I want to see TradingView. Talk about TradingView. I know the funding company is about to open. Guys, what can I help you with? I don't have all the answers for TradingView. I'm still relatively new at it as well. I do understand the plan that Nexgen is teaching. I do understand the indicators. We can talk about all of those. I believe it is, Pete. I believe it is. All right, not a Nexgen trade. I see the head and shoulders quite a bit. Been interested in seeing if I can capitalize. So you're saying, Better Dad, 3 divergences where the third one makes the next shoulder. Third divergence, lower than the higher. Look for an opportunity to go short. Let's see if there's a lesson in there. So let's do this. What does the large chart need to say? I'm leading the witness a little bit, Better Dad. Make it be from a termination condition. Don't fight strong triggers. Does that make sense? Otherwise, you're going to try and go counter on every 3 divergences you see. And remember, 3 divergences may stop a trend. It may just push it a little lower before it goes back up. Does that, so large chart, I can't stress this enough. Fighting those large triggers really works. Did this just happen on the ES? Yours is good. Let me go to the ES though, and let me get a clean slate to do it. And leave some annotation room. No, it's okay. That's how you get good. So here's the one thing. I don't have it, but you will. So there's your term. And that would be your term mirrored over here. Because I think this is important. Excuse me. So when you're writing a plan, always starting on the large chart. So what do I need to see? I need to see a term on the large, and I want to see small triggers roll. What does this do? This says potential top, term, all that good stuff. So what you're doing is, even though the trend is up, even though the large are up, what you're doing is you're saying to yourself, okay, I've reached an area that could stop the market. My fast moving average is saying, hey, things are changing. Does that make sense on the large chart read? And then what are you seeing on the small chart? So 3 divergence is good. Head and shoulders pattern is even better. And what's it doing? This is confirming likelihood of top forming. Does that make sense? So there's your first part, the 3 divergences. I like to talk about what it's telling me. And what it's telling you, I'll just leave it down here, I suppose. What it's telling you is that that top is likely, yeah. So I'm going to go one more further. And I'm going to cover up exactly what I want to talk about. There we go. And I'm going to cover the third divergence because I need to type. When smalls get below large, large roll to red. Waiting for this increases chances of success. Because what happens is, even with the third divergence right here, small triggers are still up, large are still up, everything is still up. If you just wait for those large to roll, this is where it starts to come together. This is where things, your small chart says, better dad. I know the large chart has a termination, and I know that the small triggers are rolling, but that's a lot going up. Check this out. We're losing it. We're losing it, losing it, losing it. And we're showing change to the other direction. And your entry, better dad, love it. And then let's do this. No terms on the large chart. Because with all of these triggers up, if you had a fib or something here, it could definitely create a bounce. Everything that you did on this trade is solid. You're just finding a better way to take advantage of these amazing fibs. And it's the patience to wait for that roll. One of my favorite pictures, and I'm glad I found these again. Let me find it. And you've probably seen this. The might versus has. Everything comes up to Fibonacci resistance. And everybody's going to say, man, this might hold. This might hold. This is resistance. It might hold. And some of you will jump in. Well, you won't get a confirmation bar on the second shoulder. You don't know that that's a divergence until all the way down here. So if you get in when divergence is true, your entry is about right there. You're still trading directly into large triggers up. Where was I? I don't even remember. What was I doing? There it is. And this is where that patience comes in. This price right here, where I hope Fibonacci resistance holds, is typically the same price where my indicators have told me that Fibonacci is held, that now we're going down. And maybe the same is true on yours. You can hope it holds here and get caught in the dance, or once those triggers roll, then you can do it. So better Dad, if you were looking for that confirmation from here, if those triggers have rolled and the small are below them, uh-oh, here comes a lesson. Small's below the large, space between the two, both are wide and angled down. Couldn't we agree that that's odds favorable momentum? Probably. But better Dad, you have a fib right here. Over here, you're trading from the fib. I love your entry. And don't be insecure on sim. I need you to have balls of steel on sim. And then go back and work through it the way we just worked through it. I think this is a great recognition of a pattern. And better Dad, I'm going to be that voice in the back of your head real quick. Do you need to go counter trend to reach your goals? Do you need to fight large chart trend? Do you need to fight large chart momentum to reach your goals? Or are you trying to find more because you don't want to wait for the best? You don't have to answer it in the room. But I always want you guys to think about that. Why am I looking for more trades? Is it because I need them? Because I don't want to sit still? And there's nothing wrong with it. There's a lot of opportunities out there. But remember, the easiest way to commit financial suicide is to trade against strong triggers or to trade into termination conditions. I know you're super impatient. That's why I said that. We talked about this Friday, I think, or Thursday before I left. So many people in this room want all the money. So many people want to make thousands of dollars a day. And that's normal, guys. I want to make thousands of dollars a day too. But are you capturing $300 a day? Can you do it consistently? And if you can't, if you're not reaching $300 a day, what's keeping you from it? Is it your trading plan? Is it you're chasing all the trades and taking losers you didn't need to take, right? Is it bad management? Is it not patience? What would it take to make $300 a day? I believe, and this is just me, if you could make $300 a day for 30 trading days in a row, you could probably make any amount of money you ever wanted to make. Because you would be following a process that's been proven to win more than it loses. You have created the patience to become patient, to wait for the best of the best, to take the highest probability, right? So better Dad, there's your 1, 2, 3 off of a termination. And that one didn't work, right? And then there's 1, 2, 3. That's number 4 off the termination. And that one's not working with the triggers up. So it's important that you come up with an idea. You'll get away with fighting terminations once, maybe twice, every now and then. But more often than not, it's going to mess you up. So be very specific on what you're looking for. Be very specific on the rules that you're looking to have met. And then this is the part nobody likes. Go find that pattern, better Dad, not just in the moment. Every time you have a termination, circle it, right? My large chart rules are met right there. Can I identify that pattern on a smaller chart? Look at that, 1, 2, 3. There it is. No, I don't think that's it. 10, 16. There it was right there. Pattern's not met. And that's it right there. Observe, but consistency. My goal is, man, I love seeing a trade. I love seeing a trade and going, I think that's an awesome trade, right? Look what it did. I love that. I think it's an awesome trade. The challenge is I'm looking at one trade. I need to find that same pattern 50 times. And it can't be almost. I need to find that same exact pattern 50 times. And I have to prove to myself, out of those 50 trades, it wins at least 26 of them. That's it. And if I can't prove that, it has no business being in my plan. It has no business. I don't even need to waste my energy looking for it. That's how plans are built. Not from the one trade, but better, Dad, rather just what you're doing. You're going, wow, I noticed a pattern. And now I need to study that pattern. Let me get some feedback on that pattern. But now you know what you're looking for, right? Now you know exactly what you're looking for. The patience, and I don't think I gave you this one, so let me give you this. Now you can start testing your theory. Now you can start testing that same pattern, and you have a picture of what it should look like. That's my favorite part about what we do. Guys, I see patterns all day long. And if I traded every pattern that I saw, I would be a mess. Probably wouldn't work out well for me. It's okay. You're in the process of proving it, right? But every time you guys post something like that in the room, I assume you're taking that trade. And you did take that trade, Better Dad. I saw your entry. It was right there. Okay. On your live account, are you trying to make money on your live account, not testing, but rather following a plan? Okay. So I want you to remember, your body, your muscle memory doesn't know if you're in the batting cages to swing that bat or if you're at home plate swinging that bat. Your body has no idea. All you're doing is you're creating muscle memory. And this is great because now you're testing, right? So if you were live, if you were looking for something, that's great. Why are you looking for more and more trades instead of mastering the best trades? And you can do whatever you want. But why are you looking for more opportunities without just mastering the best opportunities? I'll give you a hint. It's a 5-letter word. I know. Do you remember when that little cricket sat on Pinocchio's shoulder and said things that Pinocchio probably already knew but needed to hear to keep him out of trouble? Sometimes that's my job. I don't give trading advice, and I know you're impatient, which is why it's probably so important to have an impartial voice reminding you that there's all the opportunities out there. Jiminy, thank you, David. Goodness, I couldn't remember it. I knew somebody would have that for me. That little cricket, that's all I could come up with. I could see him and hear his voice. That's your conscience. It's good. And better, Dad, my brother does it to me. Just so you know, my brother does it to me. When we talk and we take and we plan and we look and we learn, we bounce off each other all the time. Hey, is that the one? Is that really the one? Let's look at it. Let's talk about it. So it's good stuff. It's part of the process. Part of the process. All right, guys. You want to talk TradingView a little bit? That's it. Like it's your job. And you know, better, Dad, I've said this before. So my wife says in her job, in a surgical setting, if she breaks the rules, people die. And that was the mindset that she took into trading. If she decides to not let them get under first, they scream in pain when they cut them open, right? There's a process. Not a, well, I don't know. If you're impatient in the OR like you are in trading, I don't know if I want you as my anesthesia guy. He's almost out. Start cutting. Trauma specialist. Yeah, her too. Creating it or fixing it? I'm amazed. I love anesthesia. You guys are my favorite people. You guys have taught me that I could be a heroin addict really easy. My favorite moment is when you say, "Here comes the margarita," and I get that warm rush, and I was like, "Oh, I'm gonna knock over a liquor store," and then I wake up with a new spine. Drugs are bad. All right, let's talk trading to you guys. I love chit chatting in this room. I really do. It's so much fun for me. And better, Dad, I have 6 months up here. We'll have to meet up one day and grab a burger. That's it. All right. So Miss Anna, this is one of the best pictures I can give as you guys try to transition. Um, Reminding you that there's not a lot that's brand new. Not a lot that's brand new, guys. Everybody has seen the midband. Everybody has seen divergence. Small and large triggers, one-to-ones. So I want y'all to remember that we're not rewriting anything. We're not creating new and unusual things. What we're doing is we're taking what we've always done and helping you guys capitalize in a different arena, because this is the arena that you're going to need to use our funding company. And guys, I want you to use our funding company because one of the greatest things is I have been helping people learn to read indicators and find success um, with the Nexgen software for 5.5 years now. And now to be able to carry that on and to say that, hey, not only are you using software, but you're with us in the funding company. And my goal, I want you guys to be successful. I want everybody to take withdrawals all the time, consistently, because it means that you're finding success. And guys, when you find success, we'll find success. So this is TradingView. And Cav, you're right. When you're used to the Renko bars, it's a little bit of a transition because this is your workspace. And guys, it is a 15-minute and a 1 minute. And that's exactly what it is. It's a 15-minute and a 1 minute. And this is what Nexgen used before the Renko bars, Cav. So we're going back to the good old days is what it actually is. This is a big slow chart, guys. It takes 15 minutes to build one bar. But does everybody see that the trend is up? The background is green? That's pretty consistent. Smalls are above the large. That's pretty awesome. And look what's happening. See that divergence high? We've reached an area that could stop the market. Your small chart is showing that change. And it's all the same thing. It's pretty cool. So when we talk about TradingView, let me get to my TradingView folder here. One thing that I've started for you guys is a journal, the same way we do it in the other one. Click on your chart, Wayne, and move it. That's it. I don't think there's an auto center. And guys, we're going to do a lot of this today too. You can auto center. The auto or fit button on the chart toolbar allows you to automatically adjust the chart view to fit all data within the display. So that would be, they say it looks like bottom of the chart. Oh, right here. So you can do this. You can maximize. It's the reset chart view. Is that the one you're talking about over here? That's latest updates. That's a settings. Auto fits data to screen. There you go. I don't know. That's, I mean, you can do it, and that'll keep it in. It's not the pop-up. Take a picture for me. So you've got reset chart view. Scroll over the price above the wheel right here. Right here. How come you guys are asking me this question if you all know how to do it? So like that, Josh? That's the up and down. So let's do this. If I squish it, I don't see an A and an L. Oh, there it is. Auto fits data to your screen. What's L? Logarithmic. That's fun. There we go. You guys are awesome. So let's do this. So hover over bottom of the price line. I can't think of it. There we go. How to auto fit data on your charts. There you go. I don't know if it'll do it automatically. That's pretty cool. So right here, AL. So if I wake up and it's all like weird and wonky and not anywhere where it should be. Oh, does it stay? It stays on. So guys, if you click A and that's activated, you can't move your chart anymore. You can't move it automatically. See it, but I don't like that. On my small chart, I can't read that. So maybe great for the large chart. I don't know that I like that on the small chart. I like a little room to breathe. So great question, Wayne. Thank you for that. The A and the L down here, auto fits to the screen. I don't particularly care for it on the small chart. You guys may like it for yourself. Good stuff. One of the things with the candlestick bars, I like them because I'm finding that I have less risk when I do this. This termination, triggers rolled, HVA line. So like if I wanted to sell the HVA here, I could say, you know what? 75 bucks is plenty of risk. If I'm gonna hope that this HVA holds, I don't want it to go past that pivot. I had a termination condition. My small triggers rolled, and now we're fighting triggers, which is horrible. But I find that these minute bars, I'm getting less risk. And see, I like being able to do this. We had the termination. We had the small triggers roll. We had an HVA line. Let's see if they make it back to the other HVA. Ah, they hit my target and didn't fill it. Guys, that is the HVA trade. Termination, triggers roll. I put over here for you guys, and I'll drop it in the room. So what I've been working on for the last couple weeks, it happens sometimes, Cav. I should probably close out of that one. is I'm creating this journal for you guys. And I think you should go through and do it as well. But just pictures of what it looks like to have a trend trade, pictures of momentum trades management, no more longs, no more shorts, those are terminations. So I dropped that in the room for you, and these pictures go with the trading view plan. And I'll drop this in the room for you. And all of this is available on the Nexgen page, guys. Here's your workspaces, what they do, 15-minute, 1 minute, and then checklists for the entries to help you guys out with entries. And then you'll start building pictures as well. And that's the most current version, guys. And it's not a long plan. It's 3 trades, 2 charts. Sound familiar? Lot of opportunities. Lot of opportunities. So Anna, when we talk about what you're looking at, that's one way to put it, Cav. Obviously, I'm using it. Let's say this. I'm using a big chart and I'm using a little chart. I'm using a big chart to give me the overall, to help me identify areas that may be problematic. I'm using the big chart to help me define momentum with nothing in the way. And then I'm using the small chart for entries. I'm using the small chart for entries. I'm using areas on the small chart for targets. I'm using the small chart for trend trades. Yeah, so big chart, little chart. And this is one of those things. If you tried the short at the HVA, you can see that the large chart is up, that the small triggers are up, that the large, like everything is above that area where it's been sticking. So you're going to wait for agreement and look for an opportunity. And until you begin building your own plan, guys, you can use that trading view plan that has the trend trade, the momentum trade, and the HVA trade. And then inside of that spreadsheet, you're going to see examples of each. Have a good one, Cav. And then I've also got this, and I'll drop this in the room. Boom, boom, boom. Kind of examples of each trade. What I think you guys are going to find is that even though it feels new, it's not. It's everything that you've been looking for a while. So the HVA trades. The HVA trades are that first opportunity off of a termination condition. So large chart reaches an area. Small triggers roll on the small chart. You're trading in the direction of the trade. Buy or sell a pullback to the HVA line. So if you break that down, and I'll drop this PowerPoint in the room as well. If you break that down, zone reached on the 15-minute chart. Anna, does this all sound familiar? Triggers roll on the 1-minute chart. Sell a pullback to the resistance line. Nexgen's been teaching this trade for as long as I've known Nexgen. This was the second trade that I used to teach in the 101 class. I would teach you guys how to recognize a trend trade so you understood momentum and termination conditions, and then I would show you how to capitalize with an HVA trade. Trend trades are the same, guys. Nothing in the way, this is key, on either chart, and then buy or sell a close on the correct side of the triggers. So when your large chart is going down with momentum, very familiar look, nothing in the way, we are going to look to the small chart to make sure that there's nothing in the way as well. That's one of the things with minute charts is both small and large chart can mess up your good time. Both small and large chart can stop the market. So when you've got both of them clear and everything is good, you're going to sell a pullback. You're looking for the mid-band and then the close on the correct side of the small triggers. Because on these 1-minute charts, guys, the small triggers can stop the party. The small triggers, you don't want to fight them. You want to be on the good side of them. When you're on the good side of them and everything's going right, it's magic. And then finally, there's the momentum trade. This is the one that I like, and this is the one that with minute charts, it's pretty awesome. You have that clear path and strong triggers on both charts. And then all you're doing is when both charts are absolutely screaming in the direction of the trade, you're taking that little snapback. That's the picture Cindy took earlier. That's the one Wayne took earlier. Everything says up, price gets above it, pulls back, and you just ride the momentum. And man, it feels good to ride the momentum. Vittorio, how do you save more layouts? So every time you build one, Vittorio, each time you, whoops, what am I doing here? Kill this. So every time you add a tab, so Vittorio, I'm going to click the tab and then it's going to let me create a new layout. It's there. It's saved. I don't have to do anything special. So like here's NASDAQ. And I can close it out. And then if I want it to be there when I open up tomorrow, let's say I'll make it an XRP chart. If I alter it, it'll ask me if I want to save it. There we go. Once you alter it, it'll ask you if you want to save it. So you can save it. Click on it. Now it's saved. It'll be there when I go. See the plus right here, Vittorio? Right there. Make that an arrow again. So to create a new layout, that's the same thing as a workspace. Click the plus tab and build it. It will save when you close TV. Does that make sense? So for example, let's say I'm okay, I want to create a new layout and I'm super interested in trading feeder cattle. So I click on that and suddenly I have a feeder cattle chart. Well, you may have hit your limit. You've got, oh, that's mine. How many do you have open? You have one. Which trading view plan are you on? If you're on the Essential, you can have 2 charts. If you're on the Plus, you can have 4 charts. If you're on the Premium, you can have 8 charts. So you are on Premium. So when you go to click it, it doesn't do anything at all. Do you have the plus button? This is where it's easier for me because I have the microphone. And you click it and you don't get this screen? Or you do get this screen? We'll work through this. But open another. Create new layout. Or you can use one of the templates that you already have. So if I'm building, so Vittorio, do me a favor. When you click this button, take a picture of your screen and show me what you see. Right now I'm kind of guessing what you're looking at, and then that'll be easier for me when I see that. I hope it's easier for me when I see that. It should be. I'm pretty comfortable with this one. Before, after allows you to reset the chart with a The auto. Yep. Nice. Good one, better dad. Wayne, what is that and how do you use it? That looks like a volume indicator. Have no idea, Wayne. Um, looks like a volume indicator. I'm not sure how you got it on there. It may be on the first run when you open. So let me just go to my NASDAQ. If you go to indicators, I believe John built the volume indicator into the workspace. It just shows the volume of the market. I don't know what NG is. Is that NASDAQ? Next-gen template? Okay. Oh, next-gen, duh. Yeah, so John has it in there because there's people that use volume on TradingView, I think. I don't use it. I don't teach it. I don't have a plan that incorporates it. Pete uses volume and what he does. Um, I don't have any paperwork or experience with it. All right, let's see what we have, Vittorio. So this is what comes up when you click this button right here. Um, Let me think. We're going to Google. Hey, Pivot Trader. Good to see you. All right, several parts already listed. Let me see if there's something. Oh, okay. Got it, Vittorio. You're clicking this one, not this one up here. Perfect. Yep, you got that plus. Yeah, no worries. Thank you, Vittorio. I'm telling you, all the questions that you guys ask right now about it, you're going to make me better at helping people in the future. So thank you for that. We're still making mistakes, so we learn how to fix them. Thanks, Vittorio. Steve Diego, odds favorable, clear path, and you make money. Odds favorable, clear path, and you make money. Not odds favorable, no clear path, and you make money. I don't know why you did anything you did, but you certainly did it. Odds favorable, potential to break, you made money. Don't have momentum. Stopped out, couldn't move quick enough. You're trying to take momentum trades without momentum. And then you said it bounced off an EMA. I don't see an EMA. Everything's going up, and it looks like you're making money on the way up. Again, Steve, I don't know why you're doing it in here. I can't see your entries. On other chart, annotating trades. There's perfect chili dogs. Oh, well, what good does, okay. Not a perfect chili dog because you didn't get below the area. This is your perfect chili dog over here. Down to the fib, clear path, down to the fib, clear path, up. So I appreciate it. I can't tell what you're doing though, right? Everything's green. It looks like you're going up, but you're getting whipsawed. all over the place. Entry, exit, entry, exit, entry, exit, entry, exit. So I don't know. Here you have odds favorable, nothing in the way, and it looks easy. Okay, those aren't piggyback triggers at all. Those are inside. They don't become piggyback until up here for your final trade. Then they're piggyback. Do you see the difference? But again, I don't know what your entries are. Once they piggyback, it looks like it was pretty easy. Before they piggyback, it looks like you might have took a couple on the chin there. So maybe that's the lesson in the chart. Is because you want them to be piggyback doesn't mean they are, right? They have to actually be piggyback. I love this one, odds favorable. And then they go to weakness and your momentum trade dies. And then you still have weakness and these struggles. And then they establish the strong trending market and it works. Odds favorable, nothing in the way, and it works. Odds favorable, nothing in the way, it works. Odds favorable, nothing in the way, it works. Weakness into a term, maybe you got lucky. But I noticed you didn't really make any money on this one, which means you didn't trust it because you didn't have a clear path. Does that make sense? I hope I'm not off base here. That's what I see. It's effortless with momentum and path. And once you sacrifice one of those on a momentum trade, it becomes more difficult. It doesn't mean that there's not a trade, Steve. You could still have a trade, but you know where the easy ones are. You know where the easy money is. And this was one of the things we were talking with the gentleman before, is he kept trying to catch those ones that weren't quite perfect, and those are the ones that he found himself giving money back on. And I think that's a pretty common thing is we know what perfect looks like, right? I do. You guys do. You've sat in this room enough. You know that when everything is screaming in the direction of your trend and there's nothing in the way, you'll probably find a way to get paid. Once you pull one of these two out of the equation, you're going to work harder. It doesn't mean that you can't find opportunities, but you'll work harder. You'll have to manage more assertively. And Steve, I just think yours is such a good example of that. Your easy ones flew, and they were over before they started. And the not as easy ones, it looks like you did a great job managing. Good stuff. All right, guys, start flooding this room with questions. What are you wondering about TradingView? Oh, let's go through Algo. Tom, I'm sorry, you asked a question and I missed it. Whoops. If you go to instructions, Tom, Algo Trader, and you come right down here, TradingView indicators get access. Let me drop the link in the room. So for those of you that are still getting these indicators, if you scroll down, there's all the workspaces. If you don't have the indicators yet, though, guys, you need to take your TradingView ID, which is right here. Mine's Mark Novak 5572. You need to send that to Jason so that he can activate your indicators for you. Sometimes, Steve, you know what? I think that's part of it. And this lesson isn't just for Steve, this is for everybody. The better you get at reading your indicators, and the more likely you are to trade what you feel instead of what your rules say. I fall victim to my opinions when I'm convinced I'm right because of my trade instead of following my rules, guys. Those are my worst trading days. So I think it's pretty normal. And you just work through that. You just always say, what are my rules? Did I follow them? So Algo, you're going to want to do that. Guys, the one thing that you won't get, the one thing that you're not going to get with the indicators, you set up on the beta and lost. Lost money, lost trades, don't know what to do. You're mine. Gary, are you really going to blame that on the beta? I tried to. It turns out that it was gone long before. Guys, the only thing that you're not going to get from Nexgen regarding anything that we use in the plan is, whoa, that was wrong. Where'd it go? There it is. Are these zones, these supply and demand zones. Yeah, absolutely, Jerry. How do you get it on the app? So, Algo, this is going to get you and Jerry at the same. So let me do this. So my app is up. I'm gonna minimize my app, guys. So if I click on the Nexgen Futures view chart, it's gonna open it in the browser. Is everybody kind of on board with that? So Jerry and Tom, you guys should both be there, right? So here's what you're gonna do. It's view only mode. I want you to go to copy, and this is the NASDAQ one, and I'm gonna click copy. NASDAQ Futures Day Trading copy. I can call it Tom and Jerry because, you know, that's who I'm talking to, not at all the cartoon. And I click save. Once I click save, it goes to the browser version of TradingView. But what happens is if I come over here and I click this plus button out, Tom and Jerry, Jerry and Tom, say Jerry and Tom, create a new layout, and then I'm going to come down here. And there's the one that we copied, that we saved. And now I have a NASDAQ futures market. So you can do that for each one. You'll come through. And so if I want to do ES, I'll click on the link and I'll copy it, save it, open up my app, create a new layout. You're welcome. And then it's right here in the drop down. There it is, ES futures. And now I've got my ES market in front of me. Jerry, did you catch that too? You're not really even downloading the workspaces. You're just going to click it, copy it, and just go over. And then once you do that, when you close TradingView, they'll be there tomorrow. Steve, I don't know about the 80% intro offer for just the first month or going forward. Which intro offer is it? I'm assuming John mentioned this. And is he offering you guys 80% off of accounts? So for Nexgen users to come in, yeah. I can't imagine that's going to be forever, Steve. But I could be wrong. I could be wrong, but I can't imagine that's going to be forever. McDonald's can't stay in business if their grand opening sale goes on for eternity. Can't do dollar cheeseburgers for the rest of your life. Maybe you can at McDonald's. I don't know. I'm not sure. That would be a John Novak question. I'll get the answer for you. I will definitely get the answer for you, and I'm going to type over to him right now and ask him. And if he yells at me, you're in trouble. Oh, there we go. So I just sent him a message, Steve, to get the answer. I didn't watch his video. So we'll find out. I'll tell you what, just get that first one, follow your plan. You won't care about 30 days in. There's no doubt in my mind, though. I mean, the same reason he gave you guys indicators for free, because you've already paid for them. He's going to love on the Nexgen people. He always has. He always does. So, Pete, is it a good video from Friday? Okay, I can't wait. I figured he did. Guys, I was driving. I spent 30 hours in my car. I didn't look at anything. I didn't look at a laptop. My computer was in the trunk or in the back. I guess not really trunk. Um, all right, Pete. Can't for the life of me figure out why you went short, but you did, and you were able to make some money. But when everything set up and strong, it was easy money. Can you plot triggers with dashed lines? Yeah, let me open up Trading Views. Pete, great recovery. Awesome. Let me do this real quick. Guys, when you get really good at reading your indicators, you'll take the golden goose, turn it into fried chicken, and still find a way to get paid sometimes because you know that you're, no offense, Pete, you'll know you're being aggressive as hell. And you'll say, I'm going to try and make some ticks. Steve, I imagine you can do anything you want. It was a compliment, Pete, that you were able to make money because you know it's not a high probability trade. You didn't sit and hope stuff went down. You got paid, got the hell out, and then rode the wave. Yes, I most certainly will. All right, so let me get Vittorio first. Can I plot triggers with dashed lines? So check it out, Vittorio. If you go to your trigger lines, that little wagon wheel thing, that's your settings. Under style, you can change them. It doesn't look like they have dashed though. You can go thinner, thicker. Let's see. Oh, yep, you can do a line with breaks. That's not the one. Circles, really? That's weird. I don't think dash line is an option, Vittorio. I'm sorry. I don't see a dash line option here. Different thicknesses and weights, but not a break in it. It seems like line with breaks would be it, but it doesn't appear to be. Step line? That's ugly. I don't think that's it. Histogram, cross. I don't know. Play with them and see if there's something that you like in there. But that's how you get there. Let me take that picture. So guys, adjust everything. And then if you mess something up, just go back and get it. But that's your settings tab. And that's what'll take you over here. So if you guys do want to play with it, that's a good way to do it. 30-second bars, Steve. So right here, there's all your time options. Custom interval, there's all the time options. So I'm going to say, yes, you can do a 30-second bar. That sure feels like it would be aggressive. That's 1 minute. Let's see what 30 seconds looks like. A little faster. But yeah, it certainly can be done. All right, so the trading view rules, Jerry. You need the premium plan for 30 second. You also need it for market flow. So if you're using that, yeah, they change it up on the data a little bit. Jerry, have you looked at the trading plan yet? Not yet? Right on. So this is it. I just dropped it in the room for you, and then we'll go through it again, like the actual look. So, and this even has for you guys that want the workspaces. But what we did, and I kind of wrote this out. John Novak and I worked on this for quite a while. So the 15-minute chart. It's your roadmap for key targets, turning points, and terminations. Very similar to how the 34 or the 13.2 does it. Trigger lines will be on this chart. They'll define the direction of momentum. Both triggers in the same direction is the best. To go the other way, you need at least the faster 8-3 triggers crossed in your favor. And then there's some examples. And then the 1 minute with market flow defines the immediate strength. So the same way I do it in 101, we're kind of going to do it with TradingView. We're going to know where to look for the overall picture and then how to get the quick one. And TradingView is having 60% for new members for the next 25 days. That's awesome. And then the 1 minute's where trades are going to be executed. So big chart, little chart, overall picture, faster chart. Let's find an entry. Entries on that 1 minute chart will be taken from the mid band for trend trades, from HVA lines and from termination zones and from HVA lines between the zones. So there's 3 different trades that are on this plan, Jerry. The first one is a trend trade. And let me open up the PowerPoint again. And you're going to want to go do some study on this. You're going to want to go back and find these and take some pictures. The trend trade is the first one. Put this over here. And the trend trade all starts, I'm sorry, this is an HVA trade. My apologies. We're going to start with the HVA trade. So it starts with reaching an area and then allowing the triggers to roll on that smaller, faster chart. So first, Jerry, if the market's coming down, you're going to see the zone, you're going to see one-to-ones, you're going to see a divergence low, and you're just going to let price get there. Zone reached on the 15-minute chart. That's rule number 1, whether it's going down or up. And you're probably comfortable with this one. This is kind of like the beginning for the HVA trade that you would do on NinjaTrader. And this is where we're going to go to the 1 minute chart. Once they reach it up here, we're going to let the small chart show change. So you're going to want those fast triggers to roll. You're going to want them to get below. Let me get my pew-pew. You're going to want them to get below those large triggers ideally. And then once that happens, Jerry, because of this termination, we're going to look to sell the HVA. So that's the first trade, is the HVA trade. And then if you come to the trade journal, and I'll put that in the room again, you're going to be able to go through and you're going to see zone, roll, and that's what your entry is going to look like. There's your termination, there's your roll, waiting for the sell right there at the HVA line. Does that make sense, Jerry? Here's one on crude oil where we had the zone, and when it rolls, it actually gave 1, 2, 3 opportunities for the short. So just like everything that you've done on NinjaTrader to get to where you are, to get as good as you are, you're going to do it here. You're going to have your termination, and then you're going to wait for the roll, and you're going to look to buy or sell. And that's the first trade. That's the HVA trade. And then after the HVA trade, we're going to take advantage of these mid bands when everything says up. Let me reset. Large charts up, small triggers above the area, large triggers are up strong. And look what it does. The market comes back and it reaches the mid band. And you're thinking to yourself, oh, I can't wait to take this trade. And Jerry, the most important thing on any trade that we teach with this trading view, don't fight these small, fast triggers. But eventually you get a close on the correct side, right at the mid band with everything up, and it dances a little bit, but that was the beginning of your trend trades. So when taking the trend trades, you want a clear path on both charts. And this is kind of the difference between NinjaTrader and what we're doing on TradingView. Because they're minute bars, because it's a minute chart, it's a little more likely to create a problem. So you want a clear path on both. And then when you have that, when the large chart says down and nothing in the way, and the small chart says down and nothing in the way, instead of just jumping in, you're going to wait for that pullback to the mid band, but you're not going to fight those triggers, which means that you hit it, you're patient, you're almost there, and then you get in on the correct side, and it's a pretty easy trend trade. So that's the second trade, Jerry. And then the last one is the one I think you guys are going to be taking more than the others. This is the momentum trade. And it's really just the idea that when the market is screaming in the direction of a trade or in the direction of a trend, you're going to find a way. And there's three things you could take it off of. You can take it off of yellow 1-to-1s, the same way we do in Nexgen. You could take it off the top of a zone when everything is screaming, it goes up, retests. You could do it at a mid-band. Everything is screaming, it goes up and retests. And then you can also use these HVA lines. When everything is going up and it's strong, that little retest of the HVA in between the zones is an awesome way to get to the next zone. Here's a short. Everything is screaming down. When it comes back and hits that HVA line, you're going to go down with it. That's that momentum look. I really have a feeling this is going to be the one most people latch onto. Everything is strong down. It pulls right back to the HVA. Down it goes. And then you just take it to the next zone. And Jerry, that's kind of the whole plan. And I think what's going to help you guys, I'll give you this in the room. As you go study it, start taking pictures. Actually, you don't even need this because what you have is you're welcome. Is you're going to have the trading view plan. Whoops, let me bring it back up again. So you're going to have this, and in this plan, sorry, let me scroll down. You'll have checklists for entry on all of them. And one of the things you can do in the room, guys, is as you start taking these trades and practicing these trades and taking pictures of these trades, you're going to do the same thing, is write these down on the chart, annotate them, and just bring them to the room and let's talk about them. You guys are going to help me learn how to teach this effectively. I've been going back and forth with John, and I mean, oh my gosh, these checklists have gone from huge endeavors to pretty focused. So I would print this section out, have it on your desktop, and go do some historical study. And I'll drop that in here again. I'll drop these in here 1,000 times. There's a Microsoft Word version. Jerry, there's the PowerPoint again that has the 3 trades broken down with the rules. And just one more time for you guys, there's the journal with a lot of pictures of all of them you can look at as well. So just like anything, it's going to take a couple days. John did it differently in the video? Yeah, for sure. Let me click on Pete's real quick and see what Pete's up to. Pete's like, I know class is over and you're talking about TradingView, but guys, did I mention that when everything is up and there's nothing in the way, you'll find a way to get paid? Great job, Pete. I love it. I love it. All right, Jerry. Let me get this all set up. So let's say, and I'm going to blow this up a little bit. Large chart has you feeling like you need a long trade, right? And Jerry, you're saying, man, I'm going to go long at this HVA line. So to use a limit order, I like to just come over here and click on this plus button. And I just put buy limit. And I've got a limit order waiting. Take care, Morgan. That, I think, is one of the easiest ways. So if I'm waiting for the market to come back to me, I'm going to click this. And I could also put a sell stop. And I can put these in. And then if I want to predetermine where I want, so if I get in here, I want to take profits there. And if I get in here, I want my risk to be there. And I can do all that and have it set up and just waiting for it. That's the way I like to do it. I feel like it gives me a lot of control. Jerry, maybe you have a momentum trade and you're like, I'm just going to take a momentum trade. I have to jump in. I'm going to click buy and I'm in the market instantly. Just clicking the buy button. And I can still do this. I can say, well, that's where I'm willing to get out of the trade. That's where I want to take profits in the trade. So I love the buy now, sell now. I think that's the easiest personally because they are 1 minute bars. So if I'm waiting for the close above, I want it to close above. Right here, the quantity, you can change your quantity either way. So let's say that I have a 4 lot and I buy the market right now, Jerry, and I'm in 4 contracts, and I'll put my stop loss way down here. And I want to take profits up here, but I want to take half of them off at this zone. I have to drop that down to 2, the same way you'd have to do it on NinjaTrader. And over here, I can click and I can put sell 2. So now I've got a partial target. If it comes up and hits my partial, we'll see if it happens real quick. Come on. This is how you make the market not go up as you do this live in front of your classroom. If it hits my partial, it takes me off, and now I have 2 contracts on. And I've got 2 contracts left on stop. So you can get in 4, out 2. If I'm in 4 and it's all going up and I'm like, oh my gosh, I want to add on to it, I just hit the buy button again. And this is stuff, guys, when you're on paper trading. So if you click down here, let me log out real quick. I'll show you what it looks like. You have your chart up and you're like, oh man, I can't wait to trade. This is awesome. Life is great. Come down here to your trading panel and just click on paper trading. That's simulator. And then come down here and now you're on simulator. Have fun. So as you guys get comfortable with this, Jerry, go in, enter the market, exit the market. Who cares what it is, right? Practice getting in. Practice putting your stop loss in place. Practice putting your targets in place. Practice taking 1 off. Practice taking 2. Go through all of that. You can even just hit sell and it'll pull you out of the trade. Because the opposite of buy is sell. So if you bought 2 and you sell 2, you're flat. And if you sell 2 and you buy 2, you're flat. And I think that's a lot of the stuff that once the mechanics come in, I like to keep my large chart kind of big. I think that A is perfect for me on the large chart. I personally, on my small chart, I like it blown up a little bit more, which means that I chase it a little bit, but it's clear to me. And I like that clarity. And guys, I get confused if there's too much shiny stuff. So I keep it a little better. Yeah, me too, Andy. Those allergies turned into full-blown chest cold. Bad. It was a miserable 30 hours. A lot of medication to sleep, but I'm good now. I'm coming back. It's just different pollen. Miss Anna, how are we doing? You asked for help, and I've been flapping my gums for a while. What can I help with? And Jerry, did that help? Did that get you where you needed to be? Or at least on the path to getting to where you need to be? Guys, most of these things you're not going to know what you want to ask until you get in and you make a couple mistakes, and you'll just come back and say, Mark, how do I fix this? If I have the answer, I'll run right through it. If not, we'll do what we did, guys. It's a collective. I didn't know about the ANL down here, but that's amazing. What a cool thing. And that was you guys teaching each other. And that's one of the things. And then I'm sure John said it more than once, but TradingView has 60 million users, guys. Every question you could ever have has already been answered on Google. Type it into your search bar. And what's cool is, I don't know if yours does it. Mine does it. TradingView stops. For me, AI comes right in. You're on drugs. Atta girl. You California girls. Just kidding. Yeah, it's hard to focus. I was useless after my spine surgery. I tried so hard to learn the indicators. I was lucky to make a sandwich some days. So, but Jerry, one of the things you can do is go through and let AI help you. Type in what your question is, and it's pretty awesome how much information is out there. It's all out there. It really is. And guys, I'll keep posting pictures in here when I take trades. If you have all of these buys and stops on here and you're on sim, again, the setting wheel for you guys, you can reset your account on that simulator because they do tend to stack up a little bit with the minute bars. You got it. I'm excited to have you back in class. If you reset it, all that nonsense goes away, gets it out of the way for you. I don't think you did. Let me see. Is 80% intro for clients only for 1 month? He said no, will be for all. Steve, there's your answer. Apparently he likes you guys more than I do. That's pretty cool. I'm kidding. I'm head over heels enamored with all of you guys. But yeah, he says it's good. It is good.